Oo, pahami. Gampang tadi kalau hari itu yang ke atau ke belakang tak pun dekat belakang general. Lepas tu orang batu Kalau boleh nampak lebih video. Masak dulu. Ajak dia sekarang. Bagi kat Dila, tak perlu dia boleh jaga. Awak dah orang. Ni kat sini kalau sikit. Oh, tak apa. Tak, sebab sebenarnya dia orang memang cakap kat situ je. Kat situ je. Oh, sebab tu. Tak dapat sendiri. Dia macam kata rekam sini. Sebagai hadiah kat situ. Tak payah datang sini, tak payah ke depan ni. Apa tu dia? Awak cakap suami. Belakang tempat dia tak belakang. Tapi tak ada sandwich kan? Yang belakang betul-betul belakang. Memang kita tu berapa tu? Tapi yang betul tak ada tayar. Tak nak letak kat mana? Berapa tu macam mana? Dia kata dia kat situ. Tapi dia kata tempat bagi tu kat situ je lah. Tempat bagi kat. Hello mana tu? Oh ni.
Assalamualaikum and a very good morning to everyone. Please make your way into the hall and find your seats. Some housekeeping announcements. I kindly request everyone to switch their mobile phones to silent mode or turn them off to maintain the decorum of this ST hearing. If you need to take an urgent call, please step outside the hall to ensure minimal disruption to our speakers and audience. We will be starting our enriching session in 5 minutes, inshallah.
5 minutes. Ini juga kita lebih langsung dengan sekarang ini yang menggunakan dari yang tu. Sebagai itu semua semua kita kan kita semua lagi tahu ni. Sebab kita pun dengar soal kita pun tahu ni.
Tembak tu dalam snap kali.
Assalamualaikum warahmatullahi wabarakatuh.
Sebab tadi akak dah call Cik Razwan tu, suruh dia guna mic biasa. Dia datang. Oh, sekejap. Live streaming ni nak share kat mana? Facebook.
Testing 1 2 3. Ya, saya minta maaf lah memang.
Saya ada
Encik Razwan, Assalamualaikum. Dengar?
Saya dengar, alhamdulillah.
Encik Razwan suruh cakap sikit lagi, nak test suara.
Testing 1 2 3. Assalamualaikum warahmatullahi taala wabarakatuh. Tan Sri, Raja Amir, Puan Musa.
Okey. Terima kasih.
Okay. So, this is like Murphy's Law. Whatever can go wrong, will go wrong.
Bismillahirrahmanirrahim. Tes. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salawat and salam to the Prophet sallallahu alaihi wasallam. May the peace and blessings of Allah subhanahu wa ta'ala be upon our Prophet, his family and his companions. Let's start our event today with Furqan Al-Fatiha. We begin first and foremost by thanking Allah subhanahu wa ta'ala for the opportunity to gather here today. We ask Allah to make this event smooth and beneficial, and that for the opportunity to gather here today. We ask Allah to make this event smooth and beneficial, and that every word spoken will add value, purposeful, increase us in understanding and humility, and ultimately bring us closer to Allah. I am Nur Fadila Hussein, Master Student of IBF, and I will be your MC for today. A very warm welcome to all of you here for a dialogue on charting the direction of Islamic banking and Takaful with innovation and inclusion. A very special welcome and appreciation to our VIPs, Deputy Rector of Responsible Research and Innovation of IAUM, Honorable Prof. Dr. Amir Akramin bin Shafi'i, our moderator, Dr. Nazrul Hazizin Nordin, Head of Industrial Linkages of IIBF, our esteemed panelists, Yang Mulia Raja Amir Shah Raja Azwa, Chief Executive Officer of HSBC Amanah Malaysia Berhad, Honorable Muhammad Razwan Muhammad, Chief Executive Officer of Malaysia Takaful Association. He is joining us online today. Honorable Tan Sri Muhammad Ibrahim, Adjunct Fellow of IBF. Also, he was a former Governor of Bank Negara Malaysia. Honorable Prof. Datin Dr. Rusni Hassan, Dean of IBF. Representatives from Malaysia Reserve and Islamic Finance News, IBF lecturers and staff, students, ladies and gentlemen. Alhamdulillah, I see quite an encouraging number of participants joining us here in the Senate Hall right now. For your information, this session is also being live streamed on our Facebook page. So please do share this information with your friends and colleagues who could not be here physically with us. Now, to kick off the event, I would like to invite everyone in this hall to rise as we play the national anthems of Malaysia, Negaraku, followed by the IUM song Leading the Way.
Let's lead the way, lighten the future, share the wisdom to the spirit of Islam. Revelation and knowledge, we, the Khalifa, we will fulfill the amanah. Together, we make the world a better place. Forever, expand the culture of Iqra. IUN is to realize the meaning of Rahmatan lil Alamin. Together, we make the world a better place. Forever, expand the culture of Iqra. IUN is to realize the meaning of mercy to all worlds for mankind.
Thank you. You may be seated. Before we move on, let us begin with the recitation of dua that will be led by our brother Ali Imran. فليتفضل مشكورا.
الفاتحة. بسم الله الرحمن الرحيم. الحمد لله رب العالمين حمدا يوافي نعمه ويكافئ مزيده. يا ربنا لك الحمد كما ينبغي لجلال وجهك وعظيم سلطانك. اللهم صل على سيدنا محمد صلاة تنجينا بها من جميع الأحوال والآفات وتقدرنا بها من جميع الحاجات وتطهرنا بها من جميع السيئات وترفعنا بها عندك على الدرجات وتبلغنا بها أقصى الغايات من جميع الخيرات في الحياة وبعد الممات وعلى آله وصحبه أجمعين. O Allah, the most compassionate and merciful, we gather here today in your name and seek your blessing upon this auspicious occasion. We invoke your guidance, wisdom, and grace to be with us as we commence this ceremony. O Allah, on this blessed day, in conjunction with the IIBF Industrial Talk, we beseech thee and grateful towards you in favor of all the infinite blessing toward us, your humble servant, to live in safe and prosperous life, and we seek your blessing for a flawless progress of this event from the beginning till the end. We seek your guidance to steer clear event that would be detrimental to the progress of the event. Ya Latif, Ya Rahman, we are grateful for these opportunities that lie before us and for the unity that bring us together on this day. Grant us the strength and insight to conduct ourselves with dignity, respect, and kindness towards one another. Please bless us with tawfiq and hidayat, and please guide us to greatness, peace, glory, and prosperity in this world and the hereafter. Make us a responsible intellectual. Grant us with a valuable knowledge that will be beneficial to mankind in order to gain your mardatillah. Make us your righteous servant that followed your commands and neglect the sinful act. Please forgive us for our wrongdoing. O Allah, bless this gathering with harmony, understanding, and success in our endeavors. Guide our hearts and minds to act in accordance with your will, and may our efforts contribute positively to our community and beyond. Ya Hayyu Ya Qayyum, Ya Dhal Jalali wal Ikram. We ask your blessing upon those who have worked tirelessly to make this event possible and for the safety and well-being of all present here today. O Allah, shower us with your mercy and blessings and help us to embody the values of compassion, justice, and goodwill toward all. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار. صلى الله على سيدنا محمد وعلى آله وصحبه وبارك وسلم والحمد لله رب العالمين.
Thank you, Brother Ali Imran, for the dua recitation just now. Amin, amin, ya Rabbal Alamin. Now, let's kick off our day with the insightful thoughts of our esteemed Prof. Dr. Rusni Hassan, the beacon of IBF, to enlighten us with her welcoming remarks. Prof. Dr. Rusni, the stage is set for your wisdom. Falyatafaddal, mashkur.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh. Thank you very much, Sister Fadila. Our MC today, Honorable Professor Dr. Amir. Okay. And our panel, esteemed panel's discussion today, Honorable Tan Sri Muhammad Ibrahim, Yang Mulia Raja Amir Shah Raja Azwa, Honorable Muhammad Radwan Muhammad, who is joining us via online. Cik Radwan, we are here today. We are missing you physically, but inshallah you will be able to contribute directly, inshallah, to all of us. We have representative from Malaysian Reserve as well as Islamic Finance News. Ms. Chitra is here. IBF lecturers, deputy deans, HOPs, head of programs, student society. Our brother Niaz is here. Staff, academic staff, our guests and honorable, what we call it, participants. I'm so honored to be here and humbled, in fact, to be here looking into many familiar faces. And the most, what we call it, beautiful feeling is that having to see former students, of IIBF that are now sitting and what we call it, working in the industry, contribute and then supporting us. And of course, with our partners, collaborators who are always in support of us, Cik Yusri from IPFIM, of course, what we call it, Tan Sri Muhammad Ibrahim, very strong supporter of us, who is also our adjunct fellow. Yeah. So praise be to Allah Subhanahu Wa Taala that we are here today. I'm going to be very short because Prof. Amir have to leave soon and for another important meeting. And of course, firstly, I think we should thank Allah Subhanahu Wa Taala that we are here today for another beautiful knowledge session, sharing of knowledge and thought, of which will benefit all of us. And we are very grateful for the what we call it, presence of our distinguished panel today, and with our moderator, inshallah, Dr. Hazizi, who will lead us throughout and then discussing and having a dialogue on a very important topic of very significant to the industry as a whole. Now, just to give a brief, what we call it, updates and information or background, this topic has been proposed by our respected Tan Sri Muhammad Ibrahim, our adjunct fellow, who proposed the topic to be discussed today on moving forward. The question is that the problem statement is that it's always that what's next to Islamic banking and finance industry, because many reports and whatnot, we know that actually in Islamic banking and finance, it's a bit plateau, if I were to say. And then now, how can we make things more interesting and then for us to grow further Islamic banking and finance? And I believe that this topic is very relevant. And then Tan Sri bring in his, what we call it, perspective of a former governor, and of course, young, what we call it, CEO, chief, what we call it, CEO of the industry, Raja Amir. And then, of course, Cik Radwan, from the perspective of Takaful industry. Inshallah, we will be able to get some ideas on moving forward. And then what we are expecting is that this can be what we call it, a session for us to get some output or input from the discussion and dialogue for us to bring forward. And then how can we contribute better in terms of growing and developing Islamic banking and finance? So this is our number one discussion series, or what we call it, industry talk series that we have conducted for this year. Last year, we did one on sustainability. So this program is meant for taking the hot topic, if I were to say, and relevant to the industry, whereby the format is in the form of dialogue, okay, and from which we are getting important and significant points for us to bring back home, and then for us to study, and then, maybe some input that we can take in the form of policies to be proposed to the relevant authorities. So IBF always what we call it promote this kind of what we call it activities. And then we are proud to bring not only our students, lecturers, scholars and whatnot, but also industry thought leaders to be together with us. And then inshallah, this is where, we get together and then we do good things for the ummah, for the industry as a whole. Thank you very much for strong supporters. All of you are always strong supporters. I can see familiar faces here. But of course, we welcome new, what we call it, collaborators and whatnot together with us. To those who are first time, for example, in IIBF, we are the Institute of Islamic Banking and Finance, which is the Center for Excellence for Teaching and Learning, Research and Consultancy on Islamic Banking and Finance in particular. And we do offer programs for Islamic masters as well as PhD and professional certificate programs in Islamic banking and finance. And altogether, as of now, our students, our active students is about 500. And interestingly, that 70% of our students are international, 30% are local. And in terms of the industry and what we call practitioners who are coming and joining our program, almost 30% of our students' composition are from industry practitioners. So, promotion sikit, anyone who would like to come and join IIBF, you are very much welcome. We have the programs here. We have able, I would say, lecturers, inshallah, professors who will be able to give the best ever input, and then you will gain a good what we call it journey on your learning and studying in IBF as well as IUM generally. Now we are proud that Alhamdulillah the global we receive a global recognition, and this year is a bit special to us because IUM and IIBF in particular have received 3 awards from IFN. And the latest award that we receive is IUM being awarded as the best institution offering Islamic banking courses, whereby not only IIBF, but also other faculties who are always supporting, other faculties who are always supporting Islamic banking and finance. And we cannot be here without, of course, strong support from the management. Prof. Amir is our strong supporter. We report directly under Prof. Amir, Deputy Rector on Research, because our strength is on research. And Prof. Amir is always committed. He just came from his class today. He's still teaching despite his job busy schedule as a Deputy Rector, but he's still teaching. And afterward, he has to leave soon for another meeting. But again, Alhamdulillah, Prof. Ahmed is always making what we call it time for us to support us. And then to me, that is very important because that shows a very strong support of the management towards IIBF and our activities. I think that is all. Thank you again for everyone's support. I may not be able to mention every single one of you, but always you are always a good supporter, and let's do this together. And then this is the area and the time for us to collaborate. And I believe that this is the platform that we, inshallah, provide the area for us to collaborate together. And inshallah for us, for the benefit of the ummah generally. Thank you very much. Assalamu alaikum wa rahmatullahi ta'ala barakatuh.
Wa alaikum assalam wa rahmatullah. Thank you, Prof. Datin Dr. Rosni, for setting the tone with such inspiring words. Now, I would like to welcome Prof. Dr. Amir Akramin Shafi'i, Deputy Director of Responsible Research and Innovation at IUM, for his opening remarks and invaluable insights. Welcome.
Makhluk data Saudi. Amin. Okay. Yang Mulia Raja Amir Shah Raja Azwa, Chief Executive Officer HSBC Amanah Malaysia Berhad, Honorable Muhammad Rizwan Muhammad, Chief Executive Officer Malaysian Takaful Association, Honorable Tan Sri Muhammad Ibrahim, Adjunct Fellow, IUM Institute of Islamic Banking and Finance, former Governor of Bank Negara, Honorable Prof. Datin Dr. Rosni Hassad, Dean IUM Institute of Islamic Banking and Finance, representative from the Malaysian Reserve and Islamic Finance staff, IBF lecturers, finance news, IBF lecturers and staff, students, ladies and gentlemen. Assalamualaikum warahmatullahi ta'ala and a very good morning to all distinguished guests, esteemed college industry players and our students. It is with great pleasure that I welcome you to all to this talk discussions today entitled Charting the Direction of Islamic Banking and Takaful with Innovation and Inclusion. And I also like to welcome all to IUM. Okay, I think I have to inform everybody here. Today is our first week of class. Okay, so as you can see, there are some students who are trying to get their way around. Okay, okay, and then lecturers also. Okay, all right. What I have to do my amanah here today is to read this welcoming remark prepared to me, because I think this welcome remark is also the aspiration of the organizers today. So that's what I do here. Today, okay, we have gathered here to delve into critical topics that are shaping the landscape of Islamic finance. As we witness the rapid evolution of financial system globally, the role of Islamic banking and Takaful in fostering innovation and inclusivity is more important than ever. Islamic finance, with its principle rooted in fairness, transparency, and ethical practices, has the potential to drive positive change and contribute significantly to sustainable development. This session provides a platform from academia, industry players, and students to exchange ideas, insight, and best practices. It is an opportunity for us to explore innovative strategies that can enhance the effectiveness of Islamic banking and Takaful, ensuring that they remain relevant and impactful in a rapidly changing world. As we chart the direction of Islamic banking and Takaful, it is crucial to emphasize on the importance of inclusivity. We must strive to make Islamic finance accessible to all segments of society, including undeserved and marginalized. This requires us to innovate not only in products and services, but also in the way we reach out and engage with communities. Today's discussion will touch upon various aspects of Islamic finance, including the role of technology in driving innovation, the importance of regulatory frameworks in promoting inclusivity, and the challenges and opportunities that lie ahead. We will also hear from industry experts and practitioners who will share their experiences and insight, providing us with valuable lessons and perspective. I am confident that today's discussion will be fruitful and insightful, providing us with valuable perspective and ideas that will guide us in advancing the cause of Islamic finance. I will encourage all participants to actively engage in the discussion, share your thoughts and experiences, and collaborate towards charting a more meaningful and impactful future for Islamic banking and Takaful. So therefore, that's what I read from the text. So basically, as an engineer, I think I understand a bit. Okay, moreover, okay, coming to many events of IABF, I think I know better now. All right. Once again, I extend my warmest welcome to all of you, and I wish you a productive and enriching session ahead. Thank you very much. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Prof, for a very meaningful speech that ignites our spark for today's discourse. As a token of our heartfelt appreciation for your support, we would like to invite Prof Rusni to deliver the special gift for Prof Amir. Thank you, Prof Rusni and Prof Amir. Ladies and gentlemen, we would like to announce Prof Amir's departure from our event today. Prof Amir has to leave us early due to an important meeting that he has to attend this morning. Again, thank you, Prof Amir, for gracing us with your presence. Now, let us continue to the peak of our event today. It is my pleasure to welcome our moderator, our navigator of knowledge, Dr. Nazrul Hazizi Nordin, to initiate and navigate this discourse. Before that, let me brief about his background. Dr. Nazrul Hazizi Nordin is an assistant professor at the IUM IBF. He is a head of industrial linkages at IBF. He holds a PhD in Islamic finance from the prestigious INSAF University in Malaysia. Prior to that, he completed a Master of Science in IBF from IUM and a Bachelor of Commerce double majors in Accounting and Finance at Lincoln University in New Zealand. Dr. Hazizi has experience in various financial sectors, having worked as a tax consultant at KPMG Malaysia, a research fellow at the Islamic Financial Services Board, IFSB, and a Sharia advisory consultant at Masrif Advisory. He contributes to the academic field through editorial board member roles on the World Scientific Annual Review of Islamic Finance and the Journal of Islamic Social Finance. He played a key role as Deputy Director at the 10th Asian International Conference on Islamic Finance. Beyond his impressive number of publications, he actively engaged in consultation and research projects. Without further ado, please welcome Dr. Nazrul. The floor is yours.
That's basically my entire CV. Assalamualaikum warahmatullahi ta'ala wabarakatuh. Thank you, moderator, and everyone for being here. First, when I see people come in and then they see the face, I can see a quite surprised face, because it's like you buy things from Shopee, right? I mean, you order something and then something else coming up. So I'm not supposed to be a moderator. Dr. Syed supposed to be here as a moderator. But let me tell you the story. So Dr. Syed apologized for not being here because he had a loss of his relative yesterday. Two of them, basically. So may Allah bless their soul and grant them Jannah. Amin. So I just got a call after Maghrib last night that I have, basically to step in and take up the moderator role. Well, actually, I'm coordinating the program, basically. So now, thank you, Dr. Shara, for taking over the coordinator role. And then, to be honest, this is basically my first time moderating a session throughout my academic life. And I don't expect it to be like less than 24 hours notice. And then, have to be seated alongside, CEO of banks and also ex-governor. So it's definitely quite an experience for me, but I hope I can deliver it well. But I don't have to worry, because when I look at the list of participants, and I believe you guys can be the second moderator, perhaps, to support the all right. So, as a young academician, definitely this is an honor to be seated alongside. We have Yang Mulia Raja Amir. Thank you for being here, CEO of HSBC Amanah. We have Encik Razwan. Encik Razwan, apa khabar? How are you doing there? Can you listen to me? Can you actually speak?
Alhamdulillah, very clear.
Okay, so Encik Razwan is actually very committed to come. In fact, yesterday we had informal session. Thank you, Puan Lin, for MTA to arrange for that. Encik Razwan is very detail oriented person, to the fact that there's a small echo sound. So when we're testing the link, and then he mentioned that, oh, please fix this. So that shows the commitment, and we pray for his recovery soon, and then come back stronger. Okay, all right. And then of course we are being guided by, like Prof. Rusni mentioned, we're being guided by Tan Sri Muhammad Ibrahim, always being supportive to us. So I would like to welcome, before we start the sessions, welcome everyone to IUM and IBF, especially for these sessions. Before I begin the moderation and the sessions, let me just perhaps I can explain the flow of our discussion today, so that everyone will be in the same understanding and also in the good spirit, perhaps. So I mean, this is what we have discussed through the panelists, that what we will do is that first I will allow the each of panelists to present their ideas. So like Prof. Rossi mentioned before, the idea is that we want to listen from them. What will be the groundbreaking idea that chart the next directions of Islamic banking and finance? And then after that, like I mentioned, you guys will be the second moderator. So I hope there will be a lot of interaction sessions. But I mean, there's a suggestion for us to use the digital Slido and everything, but I decided maybe it's a good time, I mean, to go old school, speaking directly to the panelists and everything, right? So I think that apart from facilitating the discussions, perhaps one important role of moderator is always to set the direction of the discussions, not just the direction of industry, but the direction of sessions, basically. So perhaps I can give an opening remark first, and then we will get the feedback from the panelists. If I can get Brother Zul to share the slide. So I'm considered young and quite inexperienced. So the way that I'm going to do this is basically I have to tell a story of others, right? Not myself. So let me just, if you can put in the full screen. Okay. Can we go to the next slide? So what I will do is basically, I will tell you a story. So this story is about a guy named Trevor Field. So Trevor Field is just a middle-aged man in South Africa. So basically working as a freelancer for magazine there. So one day he went for a fishing trip in one of the village in South Africa. So that's where basically he saw a group of ladies, like the housewife and everything, queuing to actually get a water supply from one of the windmill-powered water pump. And then I mean, they were unlucky that day in the sense that there is no wind at that time. So they had to wait for at least hours to get the water, at least a small quantity of water. So Trevor feels that there must be a better way to do this. That's all where it started, because it started with a good intention. Right, but the story is not end there. Hold on. So then Trevor, get his friend, and then he come up with one innovations that you guys can see in the picture now. So it's basically he tried to combine both things. One is the merry-go-round playground, and then with the water pump. So how it works is that, so can you move to the next? So he was thinking perhaps, the children can play the merry-go-round and then start to extract the water, and then it can create the water supply. So the ladies doesn't have to wait there for a long time. So it sounds a very innovative, system that can benefit a lot of people there, basically. So and then this was booming, definitely. So he got a lot of sponsors, especially from big companies like Colgate, Palmolive, Pepsi, start to sponsoring. So in the facts that you can see at the tower tank, they also put the advertisement. So they extract a lot of fund to basically to make this thing happen. But they thought that this is going to be great invention, and the World Bank is also start citing this project and say this is great things that we should replicate this and everything. Until this is the story when it turns a bit sour, is that they don't realize that basically it's very difficult for you to keep the children actually playing the merry-go-round all the time, right? So they put this in place so many places in South Africa because they have fun. They have to utilize the fun. But it's actually after several months, Jamie, is that what happened is that instead of the children, all the makciks in Nigeria basically have to, be there and play the merry-go-round, so basically to generate the water. So they, so you can imagine, like, they're playing the while singing Wahai Bondaku Si Ikan Kaloi or something, right? So they have their own song. So what happened is that they don't realize this. So everything started to get sour, and then the project is being abandoned. Yeah. So to the fact that they actually have to pay the children to play the merry-go-round. And then there's a created issue of child labor and everything. So that's what happened. So basically, what I'm trying to set a direction here is that yes, things or innovation started with good intention. So that's the nature of human being, because we always want to innovate and that kind of thing. But one thing that I'll try to bring, I hope the panelists can do a much better explanation and discussion, is that a good intention is not enough. Right, so you have to put a sense of practicality there, right, to make it happen. Because one fact is that, can we move to the next slide? Is that we don't have much time.
Just want to ask the Tazizi, if I'm allowed.
Okay, yeah.
What's the most reason the children stop playing at the merry-go-round?
Yeah, because they have to went to school and everything. Yeah, and then they start to get bored with this, right? I mean, you have the Nintendo, PlayStation, and all this, right? So that's what happens. So another point of discussion is that we don't have much time. To be exact, we have to work faster, 5 times faster, before calamities happen. Then I don't want to extend this discussion, but perhaps we can discuss this later. So that's one part of the discussion, because now if I try to relate to the industry, we have here the initiative now. People start talking Islamic Finance 2.0, from halal to tayyib. Definitely, that's a very good intention. But perhaps what we will do today, basically, to, like I mentioned, we want to ensure that this is definitely going to be working in the next couple of years, because we don't have much time, like I mentioned. I don't want to prolong this much. The second theme of this innovation, so this is quite a lot of things to put together. First, I have Islamic banking and Takaful together, so it's quite challenging here as well. But I don't want to continue this. Maybe I will continue in the next round. So perhaps I can stop here while perhaps this would be, setting the point of discussion today. So perhaps I will give opportunity for the panelists to give an opening remark first. And then followed through by our, interactive Q&A discussion. So please be ready with your questions. Definitely, we would like to hear some discussion as well. All right. So without further delay, maybe Jamie, I will allow you to present your findings first. Yeah.
Bismillahirrahmanirrahim. Very good morning. Assalamu alaikum to the members of the Dean, faculty, students, friends, colleagues. This quite a lot of openings, so quite a lot of things which were digested during the first opening discourse. So I think that sets the stage quite clearly. Just a bit of background. I'm joined today by 2 of my colleagues who are in the hall today. So Ahmad Firas, you can raise your hand and identify yourself. He's the head of Sharia for HSBC Amanah, and he's also a graduate of this illustrious university. And then I see at the back Rahayu, who's also in the Sharia team for HSBC Amanah as well. I'm not sure if there's anybody else. That's who I've managed to identify over here. So for all the, so as we get into the Q&A, I will invite them also to participate as well, because they're on the front line. So once again, thank you for the opportunity to present this morning. It's a conversation, it's a topic that is ongoing, and one that we often hear a lot at conferences in terms of what's next for Islamic finance. People are in a rush, it would seem, to move from here to there. And for that, I just would like to give a bit of an introduction as to where, how the market has progressed over the last 70 years, just to give a context, because we're all in a rush to get somewhere, which is good. But we also need to take a step back and appreciate the kind of developments that we have already achieved in a very short space of time. So with that, if I could just move to the first slide. Yeah, the history of Islamic banking. I just wanted to give, this is obviously not all encompassing, yeah. And I know I'm speaking to academicians, so it's also quite daunting, lah. We're practitioners. Academicians can be, it's a different playing field, but I believe this initiative to bring people together is definitely encouraged, and hopefully this will translate into something meaningful. So just to give a snapshot, the last 70 years, we've seen the proliferation of Islamic finance, starting with, as early as the 50s, where we came with the concept of modern Islamic finance came into fruition. 60s is, we all know this, so I won't really dwell on the matter, but we've seen the proliferation of Islamic banking with the establishment of a savings bank, Tabung Haji in the early 60s. And then we went on to the academic institutions. I saw IIUM was established in 83, so that's slightly later than the timeline would suggest. And then we have the proliferations of Bank Islam, Dubai Islamic Bank before that, which I believe today holds the mantle of the oldest Islamic bank in the world. And in the last 2 decades or so, we have seen a proliferation in terms of accounting standards, regulatory frameworks, capital markets, and so on. And kudos to Bank Negara, of course, Tan Sri, am I under your guidance and your stewardship? Islamic banking in Malaysia has now, as you can see at the bottom of the page, is already touching 37% of the market as of the third quarter 2022. And it's rumored to touch almost 50% in the next few years. Now in Saudi Arabia, it's already touched 83% of the banking system. It's more of a retail play in Saudi Arabia, whereas Malaysia has a fair mix between corporate as well as retail. And within the GCC, it's about 32%, and Bangladesh is 28%, while Indonesia, which we have described as a sleeping giant, given its population, given it's a G20 country, only is accounting for 7%. So there's a great and huge opportunity in Indonesia. Now, when we talk about the Islamic asset under management, so down the table below is the total financing and deposits in the Islamic banking system. But when we talk about the Islamic asset under management, now this is another opportunity for us, because as it stands today, Islamic asset management accounts for about 19%, if I can see that correctly. 19% of the total asset under management, so 18%, is already in Islamic format. And these are not just, these are the likes of your Bear Stearns, your Franklin Templeton, your Aberdeen Islamic asset management, and so on, which shows that there is a growth in Islamic asset under management, because there's a growth in the type of products which are being offered, wealth management products, sukuk products, and there's also a demand. There's an individual such as you and myself who are demanding from our fund managers the provision of Islamic financing products. A lot of the conversations we get into, people say, is this commercially viable? Will people buy it? I point them to the example of EPF. Yesterday delivered a return of 5.4% for Sharia and about 5.5% for the conventional. People are willing to put their money knowing that they're going to get a lower return because it meets their personal desires and needs. So therefore, we have a case in point. Islamic asset under management as of the first half is already touched 105 billion. So 18% of the total conventional industry, 105 billion. And in terms of assets, so assets is your money markets, your sukuk and so on, is already touching 3.3 trillion, which is a large amount, but it only accounts for 1% of the global assets under management. So there's still a fair portion to grow, but in terms of its compounded annual growth rate per annum, it's already double digit, which shows that it's at a faster growing pace than conventional assets under management. So that's just a backdrop to show how we have grown over the past year. So I come to the institution which I have the privilege of leading at the moment, which is HSBC Amanah. And we talked slightly just now about the awards that IIUM has been conferred on. So I just need to set the stage here without doing any major advertising. HSBC Amanah has been awarded ESG Islamic Bank of the Year for 4 years consecutively by the Asset AAA. And I will go into the reasons as to why we've been given that award. So this is something which when I came into the seat, we had been given the award for 2 years, and it was important that the KPIs were set that you need to defend this award as the #1 Islamic ESG bank. Trade financing bank is HSBC's DNA. You know, we started, we have, this year will be 140 years in Malaysia. We started in Penang in 1884. And essentially it was a trade financing bank to, you know, essentially support initially rubber. And then we, so out of Penang, and then we moved to Kuala Lumpur, where during the tin, you know, the proliferation of tin in the global markets. So we have been in Malaysia for 140 years. When Yap Ahloi and Sultan Ahmad sailed up the Klang and Gombak River, you know, that's where we decided to put our main office initially in Lebuampang. And today we are at the Tun Razak Exchange, where we invested $250 million US. So it was not, you know, it was something which was difficult to convince the group to set up our global office, our country office in the TRX Exchange, but it's a testament to our commitment to Malaysia. So last year was a big year for us. We won the world's best international Islamic bank by Euro Money. And this one was a very difficult award to win because we were up against all the banks, you know, in the world. And we put forth the case that we are headquartered in Kuala Lumpur. We are, you know, we have full-fledged product suite, which is what you see just below you there in terms of trade, wholesale banking, retail, liquidity and cash management, and market security services. And we use Kuala Lumpur as essentially as our global hub for knowledge as well as the center of excellence. So we have 22 Amanah branches in Malaysia. We are the largest foreign bank. We're the first foreign bank to set up office in Malaysia in terms of a full-fledged subsidiary in 2008. We have 22 exclusive Amanah branches, another 32 conventional and Islamic branches. So total we have 54. So we have the largest footprint in Malaysia. And we also actively engage clients in the Middle East, UK, and so on to strengthen Malaysia's position as an international Islamic finance hub. And then on the topic of innovation, I mean, IFN is in the room as well. Thank you for, I mean, this is not an award given by yourselves, but it was actually given by your readers. They had voted us in a poll last year as the most innovative bank in Malaysia. And I will walk through some of the reasons as to why, you know, it was perceived as such, because it was open to IFN subscribers. And they had voted on a poll, and they had voted HSBC Amanah as the most innovative in Malaysia. So if I can move to the next slide. Okay, so I'll start with our DNA, and our DNA in terms of putting value-based intermediation at the core. So as you know, Bank Negara came up with a strategy paper for value-based intermediation. Now, value-based intermediation means that you are looking beyond profit. Of course, profit is important. You know, a bank is not a non-governmental organization. It is a profit-driven institute, but profit should not be the only direction that we are looking at. We should be looking at prosperity, the planet, as well as people. Okay, so thank you to Bank Negara for setting the motion in play in 2017 by establishing the value-based intermediation cohort. And HSBC Amanah was one of the first 9 to sign up to become the community of practitioners, as we call it. So in 2018, Bank Negara issued its first strategy paper on VBI. There was 3 guidance documents, the implementation guide, the scorecard, as well as the VBI AF. And in support of this agenda, we issued the world's first sustainable sukuk in 2018. So we were the world's first financial institution to issue an SDG sukuk. And I was personally involved in that transaction. It was 500 million ringgit. And we needed to market it to investors, and we needed to essentially ring fence where we would deploy the proceeds to. So it's you know, basically typically when you raise financing in the capital markets, you deploy it to working capital purposes. You know, you can deploy it to anything you want. But when you raise a green, social, sustainable sukuk, you have to earmark it. You need to report on where you allocate the proceeds to. And if you don't allocate it accordingly, then it's not an event of default, but it's a reputational issue. So we have managed to redeem this instrument in 2023 last year. You know, the first thing that when we issued this sukuk was, do we have enough assets to tag it to? And we were not covered at the time we issued it. We had probably about, you know, 70% assets identified. Yeah, so at that point, it was sustainability linked, didn't exist yet. So it was a UN SDG, and HSBC Group aligns with 7 out of the 17 SDGs. So what did we deploy it to? I deployed it to a water desalination plant in Kuala Terengganu Utara. I allocated it to a solar power plant in Kedah. I allocated it to a private healthcare hospital, amongst others. So these were where the proceeds were. And after that, it essentially got the businesses to originate more green assets. So the concern before that was, would we have enough assets? But the net result of that is we managed to push the businesses to originate the assets. And by the time the sukuk had matured, we had over 600 million. So it was covered significantly over the issue amount. So moving on in 2019, Bank Negara finalized the value-based intermediation framework, and they issued the climate-based taxonomy discussion papers. Now climate-based taxonomy is something that all banks in Malaysia need to report on semi-annually. We need to report on what are the kind of transactions we're doing, where is the funds allocated to, is it doing significant harm? And I think it's already been 2 turns of this reporting which has been done. And Bank Negara has further enhanced the guidelines because they feel that everybody is just plonking everything into one specific bucket, which is do no significant harm. So I don't think it's telling a proper picture. So they have asked us to, to further refine the guidelines a bit more. So 2020, the cohort started to form sectoral guide groups where we worked on palm oil, renewable energy, energy efficiency, and so on, where the Islamic banks took the lead in drafting out what does value-based intermediation look like for some of these hard-to-abate sectors. What does good intermediation look like? How can we support our clients to decarbonize? So further on this journey in 2021, so HSBC Amanah, again, we took this as a strategy. We called it Project Cocoon, whereby HSBC Amanah would come out of this whole exercise for value-based intermediation to become a sustainable bank. So this was the plan which was launched in 2020. It was a 24-month plan. So what we did is we started to originate products, we started to undertake training, we developed our own internal triple bottom line framework, which is published on our website. And if I can share with you, as what was the serious challenge getting into this thing, is that we had put an ambition that 51% of our assets, which is our financing, as well as our advances, would be classified as triple bottom line by 2022. Okay, that was the stretch target, 51%. So we're going from a base where we don't know what is the percentage of our assets. And again, HSBC is a bank which is not a mass market bank. We don't have 5,000 branches across Malaysia. The problem statement was that most of our financing was to high net worth individuals. So how do we get to 51% of our assets? But that is a journey that we decided to embark on. And in order, when you set up a framework, you need to ensure that it's validated by a second-party opinion provider. You can't be shot sendiri that your framework is legitimate. So we got United Nations Global Compact Malaysia Brunei to come in and validate our framework, to say that it was independent, it was very iterative and methodical in terms of how we identify the assets. And I'll talk to you how we did that. And in 2023, we needed to report on that number. So last year we needed to report, we put to the market, our target is 51%. In 2023, we reported how many percent of our retail and wholesale assets are in alignment with our framework, and it came out at 49%. So we missed the target by 2%, but nevertheless, I'm not sure any bank in the world, let alone Malaysia, can say that almost half of the loans that they have given are to companies or to individuals who meet triple bottom line guidelines. As you know, a lot of other banks in Malaysia, they would have a target, a sustainable target, 60 billion, 80 billion. It's a moving forward target. Our metric is a percentage of our existing book in one time. So therefore, it was already, when we did the validation process with PwC, they already commented, you guys have really put yourself out there, because other banks are putting 60 billion facilitation, 80 billion by a certain point in time. But what does that 80 billion represent as a total of their financing book? We would never know. We have to do the math ourselves. But for us, we put it up front that our financing target is a certain percentage of our book, which in the case of 2023 is 49%. So if I can move to the next slide, please.
I want to second about the validations of triple bottom line. So I think this is one of the challenges that we find as well. I mean, I hope that maybe we can see more in similar initiative, because when you read the reports of banks, Islamic banks especially, it's very hard to get that classifications of what we can deem as a green financing and so on. So I think it's a good case that perhaps everyone can take up. Then perhaps because we need the numbers, we need the data that we can, then that's where basically we design the policy.
So just in a nutshell, this is the framework. It's on our website. You can download the document. But as I mentioned, the first point is that we need to, so our financing book that we had at that point in time is about 16 billion ringgit. And it's divided equally between our retail loans. So this is our credit card balances, our mortgage financing, as well as our personal financing that we give individuals. And then on the wholesale book is, the corporate loans that we've given. So the case in point is that we started the exercise, 50-50 was our loan book, according to 50 to retail, 52% to clients and wholesale. Now, the part about the retail side is that it's more difficult to classify because, again, as I mentioned, we're not a mass market bank. We have limited footprint in this country because we are, essentially a global and ASEAN bank. So the point is that how do I get 50%? How do I get 51% of my retail loans? So what we started to do is we started to look at the use of proceeds. What did the client actually borrow the money for? Did they use it to, for example, to refurbish their clinic, for example? We have a lot of doctors as our clients. Did they use it to refurbish their clinic? Did they use it to send their children to school? So we started to look at, for example, the basic needs, health, home ownership, education, medical, debt consolidation. A lot of the credit cards facilities that we provide, and you can ask Dr. Firas behind there, during COVID, we had to provide a lot of debt alleviation during this period of time. When customers are not able to pay, we don't immediately act upon it. We transfer their credit card balance into a 5-year term loan, for example. Things like this we've done. So we consider that part of our triple bottom line because we are not effectively constraining individuals who are in difficult situations. And then we also looked at home ownership. Again, we had to, I won't get into it because it's quite a long exercise, but essentially we needed to look at, B40, what is it? Because in Malaysia, the only guideline of poverty is B40, and B40 is household income. We not necessarily will know, who in the household is earning by a credit card application or by a mortgage loan unless the spouse is a guarantor. And the details that came from Bank Negara was a one-off. They gave it only during COVID. We asked, can you give us this continuous information of who actually is B40? They said, no, that one was a one-off because it was due to COVID and we wanted to help people. So therefore, I will never know what the household income is. So we needed to make an information. We needed to infer as to what was the household income based on a multiplier of typically in different states, how many people work in a household. So for those who we had their income level, we times it by the multiplier. And then we compared it against each state because who is, the poverty line in Kuala Lumpur versus the poverty line in Kelantan is not the same. So therefore, we needed to put a discount factor into different states. And from that information, we saw, is the person B40 or not, before we classified that financing as B40. So that's what we did on the retail side, which yielded not many percentage, because that is where most of our clients are, and quite premier in that sense. But we also looked at home ownership in the sense that how many, if the person is a T20 but they're buying the home for the first time, still we'll include that as part of the triple bottom line because we are facilitating home ownership. And then it came to the wholesale. This is the corporate clients. The corporate clients, we needed to look at, number one, do they have an ESG rating or not? So we started to look at the different index providers. We spoke to FTSE Russell, we spoke to Sustainalytics, S&P, the whole plethora of alphabet soups in terms of all these data providers, but we felt that all of them did not meet our criteria except FTSE Russell, because FTSE Russell works with Bursa. Most of our clients are covered by FTSE Russell and they have most of the index. So therefore we started to put an ESG score threshold, whichever loan we gave to a client who met a certain ESG threshold, and we discounted it by different sectors. So if you're in the oil and gas versus if you are mining, manufacturing, we would put a different threshold. So we wouldn't just take the ESG threshold given by FTSE Russell. We put our own threshold to make sure that we had some standards. And then the biggest cohort was those SME clients who are not public listed, who do not have an ESG score. For them, we developed our own questionnaire. And in order for them to qualify as TBL, they needed to get at least 80% in the score. So again, we did our own ideation to develop the framework.
Sorry to rush you up. Maybe we can, we can save this for later. But maybe I think I saw you have one slide that you explained about the moving your direction.
Moving forward.
Yeah.
Okay. Then let's move to the last slide. Okay, what I just wanted to highlight in I won't talk about it, but I just wanted to highlight in terms of, this is the innovation that has already been done in the industry in terms of products. I mean, even if you look at this slide per se, just to kind of just land on one slide before we go into the conclusion, is that this is the capital markets. And the capital markets is the place where we have seen the most significant development and innovation. So you can see in 2002, the government of Malaysia started out with their first sovereign sukuk. This was the first sovereign to ever issue a sukuk. That is 2002. And now we've moved up to 2023. We can see the different structures. So number one, we have non-traditional Islamic countries issuing sukuk, which we've done for the UK government. We've done for the Hong Kong government. We've moved on to airlines and the different underlying assets that we've deployed for these airlines. I mean, number one, when you structure a sukuk, you need to make sure the underlying assets are Sharia compliant, and not all businesses, for example, Etihad, you couldn't use their aeroplanes as an underlying asset. We have used the capacity on their plane. So all of these sukuks have set different benchmarks and different innovation. But I just want to say the last deal, last year we raised 1.5 billion for the Republic of Philippines. This is the first sovereign in Asia to set up a debut sukuk, and what more from a country which is not an Islamic affinity country. So you can see that Islamic banking, Islamic financing is becoming more acceptable in the mainstream. And all of these are US dollar bonds, right? So we speak to all these fund managers in New York, London, Hong Kong, and so on. All of them are comfortable, understand the risks and the risks involved in Islamic structures. Okay, sorry, can I just go to the last slide? Okay, so this is just before that, if I can set the context a bit. So we've talked a lot about, and I'll be happy to walk through it in the Q&A, in terms of the development already undertaken in the Islamic banking industry. Now, what is the problem statement coming into what's next for Islamic finance? So these are recent reports. You can see the first one is published by Fitch Ratings with the headline, Islamic finance demand affected by awareness, Sharia sensitivity, confidence, and offering. So this is by an international rating agency telling us that the demand for Islamic finance in Muslim and non-Muslim countries is a matter of knowledge, is a matter of Sharia sensitivities, because what works in Malaysia does not work in the Middle East. And I can tell you that because whenever we structure a global sukuk, or even when we speak to our colleagues in the Middle East, what works as sort of repo, we have to totally upheaval our structure to comply with the AOFI guidelines. So it's the inconsistency between what is allowed here and what is allowed there. Confidence, I mean, that is a matter of debate. But offering, it seems to be that there's not, for every conventional product, or there's not a similar Islamic product, or there's no products beyond that. And then the second headline is that Islamic banks is struggling to gain ground in the UK, and I'll let you read that report as to why that is the case. But the one that I am personally affected by is the one that says Malaysia is not yet a global hub. And why that affects me is because we are an international bank. We have chosen Kuala Lumpur as our base for Islamic thought and leadership. And if you go into that report, the reason why they say Malaysia is not yet a global hub is because of the domestication of our Islamic finance. Everything is Malaysian ringgit. Everything is geared towards a local market. We are not pushing the cross-border boundary. And the timeline for Malaysia to capture the international, because that's our niche. I mean, if you talk about any other thing, we have various positions within various, ease of doing business, for example, corruption perception index, top 20 positions, things like this. But when it comes to what is our niche, it is positioning ourselves as a global Islamic finance hub, and time is running out, as your polar bear picture would have highlighted just now. And then finally, Malaysia can become, you see, this is all Fitch saying, it's cannot, not yet, can become. So what are the ways that will help us to capitalize and position Malaysia as a global Islamic finance hub? If I can move to the next slide. So this is our light bulb moment. Of course, it's some ideas in the air, but we will walk through each and one of them. So the first one is diversification, and some of it tie back to what Bank Negara has set out in its financial sector blueprint for 22 to 26. So number one is diversification of Sharia contracts. If you look at the kind of Sharia contracts currently being offered by banks, majority of it's tawarruk, which means that it's a lift and shift. They are taking the easiest structure and they're deploying it towards nearly every single financing that they've done. So there's, for example, for ourselves, our home financing is based on diminishing musyarakah. So we take an equity partnership situation. We allow people to prepay their loan and withdraw from the surplus amounts that they've paid. So it's an equity sharing contract. So there is, there's room to diversify your contracts. Don't just put everything in commodity murabaha because it's the easiest thing to do. Now, investment account is something which is very interesting, and Bank Negara is very upset that Islamic banks are not doing more with the investment account. So what exactly is an investment account? So I think there's investment account is something that academicians can help us with because it has a lower risk weightage. So banks are banks, as Tan Sri would know, we are a very highly regulated industry. We cannot simply just give off financing to every single person, which we would like to, because for every risky loan, we need to put aside a certain amount of capital, which will act as a buffer in the event that there are certain defaults. So now the investment account is a deposit, which is you are not guaranteeing the depositor a certain return. So with this investment account, and the capital treatment on investment account is not as risky as there's certain risk weightage relaxations that that Bank Negara allows from an accounting perspective. So what banks have currently done with the investment account is that they've invested it into their portfolio of lending. So they've put like a bunch of home loans in there, a bunch of car loans in there. They have not utilized the true spirit of the contract, which is to invest or provide financing to venture capital, private equity, marginally bankable projects, and let the investor, which is the depositor, share in either the profit or the loss of that particular financing. If you are a depositor, you can either put your money in a trust, in a time deposit or a current account saving. If you want certainty of returns, if you want safety and you're not, you're not driven by returns, you just want the facility of an ATM, check, and so on, then put your money in a trust account, in a trust deposit, or sorry, in a time deposit or a current account. But if you want to have that volatility, you want to have that exposure, you want the bank to invest into many small projects and gain or lose, as the case may be, then that's where you should put into an investment account, and that's how the bank should sell it in that respect. So I think investment account has a lot more that it can do. Cross-border collaboration. I mean, this is where I mentioned, so tying back to the earlier part. I think there's more areas in the cross-border collaboration to do three things. The first thing in cross-border collaboration is the ability for people or customers to open up accounts remotely, which means that you don't have to, in Malaysia, if you want to open up an account, a bank account, you have to physically be present in front of a relationship manager. If you are a foreigner or an international student or whatnot, you need to provide your visa. So the ability for somebody based in India, for example, who has a large amount of wealth, who does not want to travel down to Malaysia, has no purpose to be in Malaysia apart from putting my money with an Islamic bank who offers USD, and various currencies, as HSBC does. We offer 11 currencies. They should be able, subject obviously to KYC, to open up an account virtually in an international market. And Firas has pointed out to me that Maldives has already done that. They have already announced that they are now accepting cross-border account openings in a virtual format. So you don't need to be physically there. I can be sitting wherever I want. I want to put my money into an Islamic account. That is the first thing that on the cross-border opportunity, gaining the Islamic wealth. Because as we know, in ASEAN itself, Indonesia, Bruneians, their ability to put money with the Islamic bank, is somewhat limited. We can see that the market is 7% only in those countries. So there's an opportunity for Malaysia to capitalize on that and offer diverse currencies. The second thing is Islamic global custodian. That's why I talked initially in the first slide about the asset under management, which is already hitting 3.3 US trillion. All of these funds, which are invested into equity, needs to be custodized with a custodian, which means that they need a custodian to be able to say that your investments are Sharia compliant, your mandate is Sharia compliant, and when those equities become non-Sharia compliant, you are putting it into a Sharia compliant deposit, okay? And you're purifying those accounts. So there's an opportunity for Malaysia to become the global cross-border custodian, because more fund managers, as I mentioned just now, Bear Stearns, Aberdeen, you name it, Franklin Templeton, Saturna Capital, all of these fund managers need a custodian to be able to custodize, give them that Sharia compliant advice, and also be able to, when it's not invested into equities because equities are down, to be able to put it into a US dollar deposit. So there's an opportunity. The limitations at the moment now is that all these US dollars which come into our accounts hit our single customer limit. There's limited places to deploy the dollars. That's why Islamic banks in Malaysia, if we get all these dollars, we don't know where to put it because there's a shortage of Islamic assets. So we have a proposal now to Bank Negara in terms of how we deploy the surplus to them, and they can then deploy it back to the Fed, for example. The third one is coming from that custodian. So once there's more dollars in the system, as I point back to that earlier article, which said Malaysia is not quite yet a global hub because there's no US dollars. So why don't we have dollars? Because there's not enough dollar liquidity. The local banks do not have enough US dollars. Malaysians don't have enough dollars. So once you encourage the proliferation of cross-border US dollar placement into Islamic banks, you open up the door for global wealth management and also across border. You will have now, the Islamic banks in Malaysia will have a surplus of US dollars. And the third part is then Malaysia can become a global Islamic capital hub because there's enough US dollars for the Islamic banks, for individuals to deploy it to. Now, the situation is that now in the global Islamic finance hub, issuers don't even come to Malaysia anymore, because what they can get from the Islamic market is a very small drop in the ocean. It's just for profiling to say I got 20 million from Malaysia, I got 13 million from Malaysia. It's not substantial. Okay, so a lot of the issuers now bypass Malaysia. In the past, they used to come here as part of their global roadshow. And the reason is that there's not enough dollars. So if we saw for 1, 2, and 3, there'll be enough US dollars in Malaysia. We can then capitalize on our position as an Islamic global hub and therefore meet that, meet those objectives. I'll move quickly to social finance. Social finance is about the underserved, as we talked about just now. So Islamic banks have more to do in this area. What we have done in the past is we've worked with our zakat, we've worked with our wakaf and our sadaqah. Of course, more can be done. Examples are iTekad, which is essentially a program where we train people and then we provide them grants. Instead of giving them a loan, we give them a grant. And with that grant, we cultivate a future clientele. So these are, for example, we support people with urban farming, for example. And then we help them partner with local restaurants in the area. So, for example, daun kesum, which is used in laksa, they cultivate the daun kesum, and then after that they sell it to the laksa trader. And then later on, we cultivate them to become clients of ours. So by using grants as opposed to a loan. So we're cultivating an MSME. Zakat is again something that corporates, banks pay zakat at a corporate level as well as an individual level. So what we've done now with, for example, ourselves, we have applied with the zakat authorities to get back 12.5% of the zakat that we provide to our employees pay zakat. We get 12.5% of it back. With that 12.5%, we then use it to provide these grants. So it's another source of providing these grants. So last year we provided a grant to a program we were teaching underprivileged youth in the PPR flats to fix mobile phones. But we saw that the last mile, it wasn't there. We weren't giving, they essentially got the knowledge how to fix mobile phones, but they didn't have the patri machines and the technology to be able to do it. So once we sent them back to their PPRs, essentially nothing happened because they didn't have. So therefore we've used our zakat money to be able to give them the initial stage financing. Moving on to value-based intimidation, we've talked about it, but there's more to be done in this space. There's a lot of things in terms of nature-based solutions that we want to work on. So when I say nature-based solutions, means that these are your carbon credits is something that is not in play yet because there's a lot of ambiguity about it, but there's different levels of financings that we can partner with different sectors in order to be able to provide a financing to a project which is not proven yet, to a technology which is not proven yet. So in the global race for ESG, a lot of the projects, your carbon capture and utilization storage, all these kind of algae farming, methane reduction, all of these technologies are not proven yet. So therefore, it's difficult to fund it from a bankability perspective. But using some of these layerings of financing, we should be able to do it. And it's right up there in the Islamic financing field to explore. So I said using just now the investment account, for example, or working with philanthropic funders. So a big area now is working with philanthropic funders, people who want a return. They don't want a return, but they'll be happy with the return, but they're not expecting it. So therefore, they can come in as a success payer. So we're working on a particular structure now where essentially the success payer will only pay in a scenario where a KPI is achieved. So we're telling these donors, don't just donate anymore to certain projects where you don't know what happens to your money, whether that's success. You donate only in a scenario where success is achieved. We measure it against KPIs. And if success is achieved, then only you donate. So therefore, it's a win-win for everybody. You don't pay unless success is achieved. And therefore, you ask them to pay a slightly higher amount. Okay.
You're moving to the digitalization, right?
Yep.
Yeah, okay. So why not I will leave that point because we're going to have a section about the digitalization. You mentioned about digital divide and so on.
Yep.
So I think we can move to that.
Okay.
So
with that, I'll.
Yeah. So maybe we can continue after this, right, Raja Amir? Okay. So now, because I think one point that very interesting that Raja Amir was raised is about the strategy that we need to have, which is tapping into the cross-border market. So this is basically the discussion that I had with Tan Sri Muhammad Ibrahim. So this could be the strategy next, because I was looking at Tan Sri was jotting down some of the point. Perhaps he's very eager to contribute. So that's the very reason why we invite the foreign banks. to be in the discussions. All right. So and then Tan Sri, I hope you can wait for a while before we pass the baton to you. But now let's hear from Encik Razwan. Encik Razwan, apa khabar kat sana? Sorry for keep you waiting there. But
Alhamdulillah, baik, basically.
okay,
So,
all right, Encik Razwan.
just a start. Can you hear me clear?
Okay, yep, we can hear you. Right.
Okay. Right. So my apology. I've been moving
Yeah.
a bit here and there, restless because Okay, but Assalamualaikum warahmatullahi taala wabarakatuh. Alhamdulillah Rabbil Alamin. Salatu wassalam ala asyrafil anbiya wa mursalin wa ala alihi wa sahbihi. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. Tan Sri Mama Ibrahim, Raja Amir, and Professor Nazrul. So thank you very much for inviting me today, inviting Anggota MTA to share our views basically. And my apology for not able being attended physically over there, even though when I promised Professor Rusni last time that I'll come immediately, because I thought like after the operation, like 3 days, then I can go and run. But unfortunately, well, the only comfortable place for me right now is on bed. But anyway, okay. So the title for today's forum will be Charting the Direction of Takaful, Islamic Banking and Takaful through innovation and also through inclusion. So in that sense, basically what I want to do in the first, I thought I only have 10 minutes, so my apology for a very condensed slide that I'm preparing, but I can always expand some little detail on that to talk about what will be the Takaful direction in terms of the reformation that we have gone through for the past 2 years, and also the transformation strategy that we plan for the next 4 years, for example. Can you go to the next slide, Prof? Okay, so basically, Takaful industry is a 40 years industry. It's a relatively young industry. In fact, most probably HSBC is much more older than Takaful itself, for example, right? And we started in this year. We'll be celebrating our 40 years anniversary. There's going to be a big celebration on this. Not so much of celebrating anything, but reinforcing that we are here, basically. Now, why we need to do that later on, I will touch on that, the reason why. Okay. Even though we are on the 40 years, basically, but the things that really started sometime in 2019. Well, of course, everyone remember 2019 for the COVID. But 2019 also is very important for the Takaful industry because that is when the industry come to the realization that, we need to do something about the thing. I remember one of the dinner of MTA that I went, and Tan Sri Muhammad is the one that is, the one that is delivering the speech and giving a very blunt, basically realization to them that most probably in some time in 2017 or 18. That really makes, people come and think. And with that, basically, they have commissioned a study. And at the end of the study, which they call the MTA 2.0, how we will basically re-emerge, as an association first, the target is as an association, to become much more efficient. And with this study of MTA 2.0, there are a lot of recommendations. And one of it, well, taking me basically to be part of the MTA family. Now, what Raja Amir also mentioned just now, one of the important things that is happened is on 2017 when Bank Negara came out with this VBI guideline framework. Now, the Takaful player, we feel very strongly about this VBI, and we feel that this is something that really clicked to us, And what we do in 2021 is that we develop VBIT, value-based intimidation for Takaful. In fact, the work started since 2018, 2019. But in 2021, we have realized this framework for Takaful called VBIT, value-based intimidation for Takaful, with the promise that 1 year from there, we will be coming out with a roadmap, which is to be delivered in July 2022. Now, in between, what we have is also the financial sector blueprint that come out around January, February, like that. They're also charting the whole direction of finance industry in Malaysia, especially Islamic banking and also Takaful. Now, let me amalgamate these three, right? Because this is the foundation, even though the timing is pretty much different, 2019, 2021, 2022. But the thing is that what the what comes after the MTA 2.0 and the initiative that we plan to do for the VBIT, we have embarked on the reformation plan called ISLAH 23, meaning to say from 2022 to the end of 2023, this is what the Takaful industry want to do in order for us to reform ourselves. You know, originally focusing on MTA, but eventually it is basically emanating, start to reflect to the industry, right? And of course, also as we promised in 2022, we come out with a roadmap for VBIT. And sometime after the issuance of FSB, the negara also say that, all the industry, you need to come up with a roadmap for the financial sector blueprint. So, if you turn on your Waze and also you turn on your Google Map, you get lost rather than get directed. So what we do basically, we amalgamate, we harmonize the two. We harmonize between the roadmap of VBIT and also the roadmap for the FSB. Now, come to think of it, when we do the harmonization, they have done a good job. I mean, this is before me, basically. The industry has done a good job in developing the VBIT and the roadmap, in the sense that when we try to harmonize, it's not to say we try, when we harmonize the two roadmaps, it connects very seamlessly. Later on, we will show that, the financial sector blueprint, we have 5 strategic trusts. Of these 5 strategic trusts, 2, 3, and 4 link directly to all the 4 underpinning trusts of the VBIT that we're developing. So it's harmonized very well. And for the past 2 years, basically 2022, 2023, we have implemented all the recommendations, all the strategy for the reformation. Originally, we want to become very gung-ho and transform the industry. Rather than you are here to transform the industry, I think, come on, stop. We have to reform ourselves first, basically. So this is why the reformation is done. And just to give you an idea, in MTA 2.0, when we commissioned this report, the score that the MTA received is only 4.6 over 100. That is how bad, basically we're doing that. 4.6 over 100, if let's say your son bring back your result with 4.6 over 100, most probably, well, you don't get it. In kampung last time, I got slack from my mother, definitely. But then, with this, basically, at the end of 2023, when we show back, when we present back the result of the survey, this survey is very independent survey, 360, include all the CEOs and also include our peers, also Bank Negara and everything. The result has turned around from 4.6 to 97%. So that's how the industry has turned around from the reformation. So now, having had that reformation, achieved over and above what we expect, mainly because, there is really a collaboration, made strength by the VBIT, direction that we want. We are saying now we are ready for the transformation. This is where Hijrah 24. Okay, this is still cooking, basically. In fact, last Friday only, we just signed the engagement letter together with one of the Big Four in order for them to guide us for the development as well as for leading us in how to develop this transformation plan, the blueprint, the roadmap, and also the dashboard. But anyway, it is in motion now. And inshallah, by the next few weeks, we will kind of announce this partnership that we have with the Big Four. And the target is by the first mile Hijrah, we will basically announce and launch the Hijrah 27 plan. Now, why 27? Because financial sector blueprint will be reassessed at 2026. We feel that if we have a 4-year plan, whatever that we do within the next 2-3 years, basically will have a big impact on the result that is expected over us. One of the KPI under the FSB 27 is for Takaful and insurance to contribute 5% of the GDP. Now, the question to the industry that I give them is that at the rate that we are going right now, how much is our contribution? Will it be significant? So we poised to be contributing significantly on this, and therefore, Hijrah 2027 is compressed to 4 years. I think psychologically it's worked. And then quite recently, I went for diving in Singapore, Indonesia. I saw plan transformasi Indonesia maju 4 tahun. No, like, well, the 4 years is not that odd. Basically, there is even bigger plan to change Indonesia. It's also still In 4 years. So in 4 years, we can do wonders. As a matter of fact, we have been 40 years. And last few years is a stellar, basically, year for the Takaful. We are in the best position to start to attempt for this hijrah, right? And hopefully by 2020 or 2030, basically, we will reach the market leadership that supposedly, to be for the Islamic financial institution in Indonesia and creating the new Takaful landscape that we aspire, where we aspire, where we create value to the country, we create value to the society, and we create value to the industry in line with the principle of Sharia. That is the gist of the VBIT, which is why I say VBIT or value-based intermediation is the single most important thing that the industry had rightly developed in order to chart the thing. Otherwise, we're going to be an empty word. We need to transform, we need to change. Can we go to the next slide? Now, the next slide shows some of the trust, while our Islam 23, we are looking at MTA, how to change ourselves from a trade association, lobbying, liaising, on behalf of the industry to something much bigger. So we look into this strategy, we call it VBOS, where we look into the visibility. One thing about Takaful is that we are lacking on visibility, right? We're having products, services, and people as good as our peers. However, we still don't reach the kind of visibility that we want. So a lot of focus on Takaful being done in 2022 and 2023 to increase our visibility. Just to give you one example. Previously, we have been monitoring this one, our value for ASR, right? Is lingering within 1 million. In the first year, we reached about 3.9, last year about 5.4, and total for the last 2 years alone is almost 9-10 million. Right, is the most searched word based on the Google trend, and our social media impression, for example, normally we're lingering around 20,000. Last year alone is about 2.5 million. So that's how big we jump. Adopting best governance. Like for example, we should run MTA as per how it is supposedly being run, basically. But in doing so, we are also infecting the industry. Right? If you can see, for example, our financial sector blueprint, when supposedly, MTA is the one running it, but currently it's being run by 11 work groups, championed by each and every of the CEO of the industry. They themselves turun padang and actually work towards, the achievement of this. And the very fun thing, you can actually go to our website and see our first interim report for the VBIT, right? It's very interesting. Right? And that is as at August. I have to stress that because a lot of people are asking me questions, hey, why this and that? No, it's as at August. In fact, it's as at August last year. So basically, there's a lot of changes, a lot of improvement that we keep. Operational efficiency, we have been seen as not very efficient in conducting our work. So when we move into this, not only that we change the operational efficiency level for MTA, but we also basically affecting the industry on that. And finally, sustainability. I'm not talking about the climate risk kind of thing. I'm talking about the financial sustainability of the association because, as an association, we can do as much as what the financially allowed over to us. But alhamdulillah, for example, we always have our levy, shy of 300,000 to 2 million, basically. Nothing much we can do for industry with that. And last 2 years, we introduced this fund for cost. I'm not asking my member to basically to contribute money. Okay, I'm not following them, not asking them, but I'm just basically telling them this is what we want to do. This is the cost that we want to basically embark. If you believe in the cost, we want to invest in this cost. The fund for cost is so successful that at first the target is like less than 500,000. We receive now quite a lot, and we have to be able to done quite a lot of things. And of course, we have the VBIT on one side, where it look into financial resilience, empowerment, the governance. I cannot go into the detail on this because, this is a subject by itself, owing the time that we have. But the thing is that if you can see the financial sector blueprint, except for number one, funding the maritime economic transformation and one value-based finance through Islamic finance, The rest of VVIP can be mapped to the FSP. The one that taking the biggest real estate of FSP is basically to elevate financial well-being. Is five work group just for that particular strategic trust, basically, right? So when I say five work group, 5 CEO in charge of that. So if you can imagine a circle, the bigger one will be the financial sector blueprint. The smaller one within it will be the VVIP, and of course, the smallest one will be the Islah that we have. Next slide, please. So that is basically our fundamental for our journey for the first 2 years. At the end of last year, when we basically present the result and start to say, remember when you employed me last 2 years, you want me to transform? Now we are ready for that transformation. At least we have to grab that opportunity. So then come this idea. This is not final. This is basically the ideation or the concept of what we try to achieve. What we want to do is we want to advance Takaful. What does it mean by that? Advancing Takaful means we want to put Takaful at the rightful place. Being in the Muslim majority country, basically we should be the leader. But currently we are not. We are just 20% of the 60% market share that currently, that is available. So how we can achieve this? First, what we need to do is basically to make sure Takaful is a household name in Malaysia. Even in the earlier presentation, basically, Takaful is rarely mentioned. It's always like Islamic banking and finance. Islamic banking and finance. Even the Imam in the member also talking about, we have this Islamic insurance. So Takaful is not yet the household name. So we want Takaful to be, something that people mention, like Maggie, Colgate, that sort of thing, Kodak. I know I remember going to Scotland asking for Kodak, but yet when they put, I said, no, that one I don't want. I want the Kodak Fuji Kodak, that sort of thing. How strong the brand is, we want to be that strong. And the thing is that, but the narrative is that we want to make Takaful as the first choice for protection. That's what it means by the first mission. And the second mission is just to double up the market share. We are not competing with the conventional. Well, directly, indirectly, basically, it will happen. But the thing is that, remember I mentioned the market share right now combined is only 60%. There's a 40% opportunity for us to basically work. If, let's say, we just take half of it, we already double our market share because currently we are at 20%. So I believe that those 40% that still yet untapped are those coming from the underserved and potentially also, from the kampung folk. We remember went to Pontian recently, like don't ever think that kampung folk don't have money. When they understand that, okay, this is how good the Takaful is in Pontian, basically, Arit Putri menangis, it's very kampung, basically. And this one uncle said that I want to buy, the protection for my whole family. And then that startled us, like, they have that money, it's just that they don't have the knowledge. When they don't have the knowledge and conscience, therefore, your action will follow through. When they have the awareness, they would want this, which is why we feel a lot about, having the awareness. So what in Hijrah also, can we go to the next slide? It's about a collaboration framework between MPA, the Takaful industry, with the Takaful operator to elevate Takaful to the right position. This is our project, to advance Takaful through making the Takaful as a household name and also be the catalyst to double the market. But how really we're going to do that? It's through market expansion, creating conducive environment, and also promoting the leadership advancement in Takaful. So briefly, this is what we have as a concept. And as I mentioned, we only signed in this very room, basically because I had my operation last week, right? So with this one of the big four, and we're going to announce who are the big four, basically they're going to beat us. But we strongly feel, because I have no problem whatsoever, going back to my members saying that, guys, the consultant give me this particular bill, right? So if we really want to go structuredly into this direction, this is how it's going to cost us. Never mind, members said we can support you. So this is the first time the unity of the Takaful is being seen across the world. So if that is something that is really, we have to see that now. So I stop my presentation for now. I think this is the last slide, basically. So that briefly, basically talking about the direction for the Takaful industry for the past 2 years, for the past 40 years, and for the next 10 years, especially the next 4 years exciting period during the Hijrah 27. Going back to you, Mr. Moderator.
All right. Thank you so much, Encik Razwan. Definitely, Takaful is becoming more prevalent segment of the financial system as we live in the age of radical uncertainties. Right? There's a lot of uncertainties going on. And then one thing that I can spot on basically is that both speakers have a common message that here that we have to be a leader one day, right? So that's definitely the situations. So perhaps I don't want to delay the conversation because I very look forward for having a discussion with the audience. So I'll pass to Tan Sri Muhammad Ibrahim. So definitely Tan Sri have a lot to share. Bouncing back what they have presented here. All right, Tan Sri, over to you. Yeah.
Salam sejahtera pada semua. In fact, after Raja Amir and Razman presentation, I don't think I have anything to say. No? Everything covered by them.
I'm sure they have something to say.
You know, when I was at the central bank, there are a few things that we wanted to do, and we implemented. One is the development of Islamic financial market, which we have done. Then now the volume is huge. And we started also to lay the foundation for sukuk issuance and development. And in the early 2000, we were involved in coming up with the first sukuk. Actually, we worked with HSBC. I'm not sure whether Steve Clayton is still there, but he retired. So we worked with him to actually sell the sukuk. We actually visited quite a number of financial markets around the globe. So that was implemented. The second one was the fintech framework, if you can recall. So we were able to implement that. And then the value-based intimidation, I think Raja Amir have touched on that. But there's there are two things that tak sempat nak buat. Is the linking of Islamic financial market across border. I think you mentioned about this. In fact, we wanted to do that because that will be the next frontier for Islamic finance. Let me read some of the notes that I've done so that I won't take much time. There are 3 points that I'd like to raise for us to expand Islamic finance as we move forward, especially integration of Islamic finance across region. The reason is very simple, because if we link the financial market across jurisdiction that practice it, then we can experience new growth stimulus for the industry. I thought that the Islamic finance basically have not grown as much as it should. Somehow the growth have slowed down a bit, even though it's much higher than the conventional banking. So what we need to do is we need to internationalize Islamic finance. Raja Amir mentioned about to globalize it. So there are a few things that I like to raise for the benefit of everyone. 3 things. One, also have been raised before. Islamic finance is too domestic centric, and growth from cross-border transactions are very, very small in relation to the overall growth in Islamic finance. The interaction between Islamic banking institutions across borders are still very limited. And then the third one is the scholars' view and opinion are too varied and cannot be reconciled to benefit cross-border transaction. And the reason why I read from this note is that when it touches scholars, have to be extremely careful. But then if the 3 subjects that I mentioned are resolved appropriately, the synergy from the collective strength of Islamic banking can be realized. And the industry would not be stagnant or worse, decline relative to the earlier growth that we experienced. Let me touch a bit on what I meant by too domestic centric. In Islamic finance, many jurisdictions have done well. There's no doubt about it. In many markets, it has become mainstream. It is a far cry from early 1980s when we started it, when it was regarded as a novelty. It's created to serve the small savers, not as big as what we have seen now. And actually, it is being created to cater to a small minority of stakeholders. If you can recall, the early years of Islamic finance involved substituting conventional banking products and services for Sharia compliant products and services. For example, loans, savings and current account, trade financing, and later deepening of financial market by issuing sukuk and short-term papers. I mean, we have been quite successful. In fact, I can term it as remarkable. For example, the volume of the Islamic capital market now exceeds 2 trillion ringgit in terms of volume. And the Islamic banking assets, I was told, is about 35% of the total banking assets. And I think will continue to grow and to expand simply because our GDP, especially in Malaysia, in fact, GDP across many of the jurisdictions that run Islamic finance will grow. But we need to think through why reliance on domestic-centric model is a limiting factor for Islamic finance over the next few years. There are several reasons that I can think of. One, by limiting the Islamic finance growth to a domestic-centric model will constrain its growth potential. We have seen this. And the previous speaker have actually raised this issue. In contrast, expanding Islamic finance across borders will open up new market possibilities and opportunities and provide a more competitive and robust environment for the industry. Relying on a single market is akin to putting all the eggs in a single place. Islamic financial institutions will be more susceptible to economic condition of a particular market. By diversifying across borders, we will mitigate risks associated with the sole reliance on a single market and provide a strong foundation for continuous growth. Diversifying operation across region will also assist in spreading risk and improve risk management. And another thing that Islamic finance greatly require is intense and increased competition. Because if you look at the conventional financial landscape, it's very competitive. In fact, competitiveness is the key ingredient for innovation and motivation to come up with breakthrough ideas. Most significantly, markets that are competitive will mean that we will be able to attract new clientele base and create better opportunities to expand operation and profit. In addition, exposure to multiple markets fosters creativity, competitive spirit, and adaptability, thus ensuring the long-term sustainability of the Islamic financial institution. So we cannot be too domestic-centric because it can carry us to a certain point. It cannot carry us to the next point, especially in the 21st century. But before I go to what are the ideas that I thought can increase cross-border interaction, let me briefly touch what are the limiting factors why Islamic finance cannot interact among each other, why it cannot become whole, why the financial market in Malaysia, in Jakarta, in Bandar Seri Begawan, in Dubai, in Saudi Arabia cannot operate as one. Instead, we are operating as a distinct and separate entity. One is the diverse regulatory framework for financial services and the lack of harmonization impede the participation of Islamic financial institutions across market. I've come across this, and when I attend many of the Sharia scholars debate and conferences, nobody wants to yield. Everybody wants to have their own way of doing things. Different Sharia interpretation and divergent opinion and views among scholars and regulatory bodies hinder seamless cross-border acceptance of Islamic financial products. I hope scholars on Islamic finance understand and accept that unreconcilable views and opinion among them are a significant obstacle to expand the future development of Islamic finance. That's the reason why I wrote a note here, so that I can say the right things. If not, they get angry. Unreconcilable and unresolved differences of opinion among scholars are a disservice to the unity of the Ummah. I was trying to find a much harder point on that, but it is my personal view that Islamic scholars have not done their job. The bankers have done a wonderful job in expanding and interpreting what Islamic product and services Sharia compliance is all about. There are other reasons as well. For example, disparities in legal and taxation issues pose problem in structuring Sharia compliant product and services. To a lesser extent, the absence of standardized cross-border product create complexity in designing new and breakthrough products. The knowledge gap is also an issue in understanding Islamic finance among regulators, financial institutions, legislators especially. Some of the legislators that I met do not understand Islamic finance. And that is a difficulty because a lot of the existing regulatory and the legal requirement are actually meant for conventional banking. It's not meant for Islamic banking. So a lot of things need to be changed. And legislators are one of the most important stakeholders for us to convince that there's a need for mindset. The media also play a very strong role. And sometimes the media is quite mischievous and naughty because one particular person or scholar raised something saying that the suku as it's designed now is haram. It cannot be used. I think the media need to be a bit more responsible in saying that type of things.
They're right behind you.
Yeah, that's why I know they are behind me. So what are the problems caused by unreconcilable differences of views and opinion? We have to accept that diversity of views and opinion Islamic jurisprudence is crucial to developing Islamic finance. There's no doubt about it. I went through it since the 80s because diversity of opinion provide new ideas and insight. But the real problem, and I like to stress this again and again, is the unreconcilable views and opinion. It will stagnate the expansion of market across region. Countries cannot become one because of this view and this problem. Varying interpretation of Sharia principle and operation leads to different ruling on the permissibility of financial instrument, especially for cross-border acceptance. I remember we designed one particular sukuk. One major jurisdiction says that it's not in line with what their scholars say. So it cannot be sold in that particular jurisdiction. Another is the absence of standardization that create a lot of uncertainty and inconsistency in applying Islamic finance principle. And inevitably, it can create a crisis of confidence in the certainty of Sharia compliance of our financial products. As the world becomes complex, so does the structuring of financial instrument. Understanding the complexity of innovation may delay or worse, cause inertia in approving new financial instrument by the scholars. Striking a balance between innovation and creativity consistent with Sharia principle can sometimes be very intimidating. During the early days of the Sharia Advisory Council, we have seen this because it's new. And most of the Sharia scholars doesn't have background in banking services, also in Takaful. So it's new for them. Because whether we like it or not, as we move forward, understanding of the financial market, banking products, and Takaful will require an inner understanding on the part of the Sharia scholars. They must know how the financial market works and how those instruments that come before them to be approved and how the associated risks will impact the way financial instruments are being structured. And most likely than not, it's groundbreaking, all these new financial instruments with no precedent to follow. So you can see why sometimes Sharia scholars become very intimidated with new instruments. I have seen it because of the understanding of the various risks involved in structuring financial product. So how do we increase the chances of integrating Islamic financial market across borders? This is something that I wanted to implement, but not enough time, like I said. To expand Islamic finance industry into the future, we need to integrate and link Islamic financial market among significant jurisprudence. That means we need to integrate Kuala Lumpur, Jakarta, Dubai, Saudi Arabia, so that the volume, the transaction among the players will be huge. The reason why the interlinkages is very important is because Islamic financial institutions across borders will trade with more counterparts with bigger market sizes. With integrated Islamic financial market, many of the benefits related to the role of financial market in an economy could be realized. For instance, efficient allocation of capital between savers and borrowers. Some jurisdictions have more savings. Some institutions require those surplus funds to basically fund their economy. And if we have more financial market that works together, we will improve the price discovery mechanism. The price of Islamic financial instrument could be very competitive in terms of pricing, could be lower. And of course, indirectly, it will enhance and deepen liquidity that will provide avenue for hedging and management of risk, which is inherent in cross-border trade. And for individual and corporation, there will be an opportunity to invest and create wealth by delivering opportunities for loan, the saving and investment, because a deep financial market will ensure that there's enough instrument for people to buy. But most importantly, the interaction between Islamic financial institutions will enable efficient allocation of funds among countries that practice Islamic banking, because those funds will be allocated to the most productive and promising sectors, which will enhance the well-being of those nations. It will also create and enhance productivity and innovation. And if we manage to link all this financial market, that means there will be a lot more financial activities, meaning that there will be a lot more opportunity for job creation. And more importantly, we will be able to create jobs with good paying salaries. And the regional capital flows currently is mostly conventional, but not Islamic in nature. We have not fully tapped the wealth of Islamic countries to actually fund other Muslim countries. One critical element in enabling cross-border transaction among Islamic financial institutions is the issue of credit and counterparty risk. If you don't resolve this, it will never happen, cross-border trade and transaction. Since the Islamic finance industry is still developing and many of the players are still new and small, their credit rating may not be as strong as they should. However, this problem can be overcome. It can be overcome and resolved quickly by a guarantee given by the respective central banks for their Islamic financial institution that engage cross-border transaction. For example, a central bank in jurisdiction A will guarantee placement made by a bank in jurisdiction B to a bank in jurisdiction A. This will take away counterparty and credit risk, as various central banks will step in the case of default. This guarantee mechanism will enhance confidence and expand cross-border banking activities. This mechanism can be in place for a certain period of time until the various counterparties are comfortable with their counterparties' credit risk. This is the single most important thing that we need to implement. And central bank need to take a lead on this. Because if we leave to the private sector, it will never happen. Because the counterparty risk will never disappear. It will only disappear if the central bank step in. But it cannot be a permanent feature. It needs to be a temporary and interim measure until the counterparty are comfortable with each other credit risk. There are other initiatives that can be implemented as well. For example, establish a common regulatory framework, standard and mutual recognition agreement in the areas of importance such as capital requirement, risk assessment, and accounting standard practices. This is not an impossibility, as we managed to get the agreement of all ASEAN countries to establish the ASEAN banking framework. It took almost 5 years to come up with this framework, but it can be done if we really look into it and try to solve some of the problems faced by various jurisdictions. Again, another critical area is to standardize Sharia interpretation, standard and understanding that can provide a unified approach to matters of Sharia principle and practices. In this respect, Islamic finance scholars must agree on a global standard for Islamic finance. This is possible by developing and adopting standard through collaboration among regulators and Islamic scholars. I think I've been saying this forever, but it has not happened. It has not happened, and because of that, it curtailed the unified approach for Islamic finance across the globe. One area that is extremely important for the future growth of Islamic finance is the acceptance of mutual recognition among scholars across jurisdictions. This will require, I think, a massive leap of faith among practicing scholars. Or the scholars are not happy when I say all these things. As I alluded earlier, scholars have a great responsibility to enable the linkages of various jurisdictions that practice Islamic finance. A change of mindset is crucial. Without a change of mindset among the scholars, nothing will happen to integrate all the Islamic financial market, all the Islamic banking industry across the globe. There are other enablers as well to create a conducive environment to flourish. This is secondary, but it's as important. For example, legal reform that can overcome tax issues for cross-border trade. This will take time, but not something that cannot be resolved. Promoting a standardized product and services that enhance transparency and facilitate international trade, capacity building and educational program that enhance awareness that can bridge the knowledge gap, marketing programs and education campaign that can stimulate interest and facilitate cross-border interaction. And we need, again, strengthen the platform for scholarly dialogue and consensus building that can assist in the harmonization, the interpretation, confidence, and consistency of Sharia ruling and practices. So that's one thing that I was not able to implement, which I think the central bank of the region that practice Islamic finance need to look into it. It can be done. It actually is quite easy to do this particular proposal. And the second thing that I was not able to do was, should we rebrand Islamic finance into another name? Because we need to expand Islamic finance beyond the existing borders, jurisdiction. That we need to think of a name for Islamic finance that can enhance global acceptance. Maybe ethical financing, maybe value-based banking, and something that take away the prejudices of linking the banking industry and services with the Islamic faith. It's something that we need. Yeah, participation banking is one. I know of one jurisdiction now doing that. That's it, Mr. Chairman. Thank you very much.
Thank you, Tan Sri. Before I let Raja Amir and also Cik Razwan perhaps can bounce back the remarks by Tan Sri. Perhaps I just want to pick up one thing that you mentioned about the domestic concentrations, and then this lead to the thought that I have also that maybe relates to the concentration of or consolidation of size itself, Tan Sri, because that's the direction or trends that we are seeing now. We will see a lot of the financial system or the banking market and Takaful as well, consisting of small numbers of banks. And then we know that this is going back to the basic theory of banking, then, that we seems that when banks getting larger in size, we tend to see that the innovations, the benefits from innovations will basically, give advantage to those most affluent society. right? So, but there's also another side of argument saying that while we are growing the industry, Chair Razwan mentioning about getting all the key players together, and then perhaps it's a time for us to merge the Takaful operators as we are building up the shares of Takaful moving forward. So maybe Tan Sri, maybe you can just give a quick a response to my statement there. Then perhaps Raja and Cik Razwan can also chip into the discussion about this concentration of in domestic market.
From now onwards, actually, the players must look at the market for Islamic finance beyond Malaysian borders. I think if we do not look at regional and global market, the development of Islamic finance in Malaysia will taper off. Definitely, it goes beyond. I'm not sure what will be the threshold. I can only guess, maybe between 40 to 50%. And then Islamic finance, I think, cannot grow anymore. Because you must remember that conventional banking is quite a formidable force. They will grow as well. So to go beyond that would be very difficult. And if you, I'm not sure. To tell frankly, I'm not sure. And then when we embarked on Islamic finance those days in the 80s, that I said is for the small savers. We never thought it will happen this big during those days, even though we were involved in the development later years. But we cannot stay domestic, because staying domestic in itself is also risky, because all our revenues come from domestic sources. What if the economy goes into a recession? So we don't have enough diversification in terms of revenues to make sure that Islamic banking and Takaful remain viable and vibrant. And another area that I always wanted to raise on the Takaful side, we don't have a strong reinsurer for risks created by Malaysia. But that is for another topic, which is a big one, which need to be resolved, which have not been resolved over the last 30 years. But it's something that if we don't have it, a lot of leakages from insurance premium from Malaysia will actually flow outside the border. Yeah.
Cik Razwan, you would like to add something on that?
Yeah, you're right, Tan Sri. Basically, in fact, I mean, that's one of the areas. There's a lot of other areas that we are basically looking to. I mean, for Takaful, basically, like we have like 19 members, out of which basically we have 11 family Takaful, 4 general Takaful, and now 4, because recently we have Malaysian Library coming as our 4th member for the Takaful. Yeah, but the thing is that when we basically discuss with the Takaful side, now what we have, okay, because of the composition, I mean, rightly or wrongly, the association industry is pretty much life or family focused. It's only for the last 2 years, basically, when we embark on Islam, we feel that there is something that we need to do with regard to general Takaful, So because this is the industry that really needs the capacity in order for them to grow. And because there is a lack of knowledge and capacity in some areas, as a result, the general Takaful only have a very limited offering that they can give. If we want to really close the gap, the protection gap, I'm not talking about those unserved or underserved. I'm talking about those areas that we totally not covering. Definitely there is a need for us to really go back to our treaty players and say that, hey, we need this kind of capacity for us to move further. Because according to our Takaful members, it's not that they don't have capacity. Capacity is abundant. It's just that the appetite is not really moving as fast as the capacity that they have, because the Takaful reinsurance, they really depends on their comfort with regards to how able the Takaful operator to underwrite better and proper. So I believe it's actually an kind of thing. So what we do as an industry, basically we try to build this. Like for example, there are 2 actually main initiative that we do in terms of capacity building. One, like the Tan Sri mentioned just now, I think I totally couldn't agree more with the Tan Sri. I mean, the Sharia people, they need to go out from their domain, basically. They need to go beyond just giving, the Sharia rubber stamp, to basically things that are being done operationally. Because that's what I see. In fact, when I was a TRO, I mean, in 24 years of me working, at least 20 years, I'm becoming a chief risk officer in various organizations. I see that, there is underutilization of Sharia committee or Sharia function within the company. So what I did basically previously is that I said totally, Sharia risk is just going beyond Sharia non-compliant, and it also includes, like for example, competency, transactional, and so on and so forth. I did expand the scope of the Sharia risk. And one of the things that we did last time is that the idea basically, I mean, when I work there, I'm giving the full report of risk, not only to the board, but also to the Sharia committee, because my thought is that the Sharia committee also need to be aware of all the things that they have. And with that thought, when I basically come and led, for example, MTA, the first thing that we do, basically, we work very closely with Bank Negara, Islamic Finance Department. We started what we call the Sharia Empowerment Initiative, when we want to have, like, for example, these Sharia people to be as equipped as the operational or other people. So we work with EY on this, and also ASAS, the Association of the Sharia Scholar. And we have conducted 3 sessions. And after the 3rd session, basically they say we want more. The first session we talk about MFRS 17. Second session is on the risk-based capital. And the 3rd one is on the ESG. These are the topics that really reach the Sharia fraternity. Sharia fraternity, they will talk about Ta'awun, this model, that particular, Sharia thing. They are pretty much cocooned within the Sharia thing. So what we say that, my argument is very simple. Have you seen the freebase scientists, Ibn Sina, and Al-Khawarizmi and everything? They are scholars. They are Sharia scholars that are very good in science, engineering, in arts, and all. So we want to change our Sharia people like that. And when we started this, now we have a Sharia scholar say that, can we have the next basically discussion on CRMSA, climate risk management and assessment. Imagine that request come from the Sharia people. So that is the kind of movement that we want to see really, on our Sharia fraternity. And from like 50, 60 attendees that we have now, we have hundreds of people attending. Now we receive a lot more people of Sharia coming to our Sharia empowerment, not to say classes, but the thing is that, it's kind of like a very, very physical, interaction the full day, to really look into this topic. And of course, the currently, when Tan Sri and Raja may also mentioned about the need to cross border. Yes, we as an industry saw the need. However, there is still a lot of things that we need to do internally in order to basically elevate Takaful locally. Because Takaful is not, unfortunately, it's not as successful as the Islamic banking and other parts of the Islamic finance. Potentially, I always thought, why, like insurance, they have the name first, then followed by insurance. Whereas Takaful, we have Takaful first, then followed by the name. As a result, a lot of confusion, a lot of people confused that there is only one Takaful, which is Takaful Malaysia. At the very beginning. But now people have more understanding. But the thing is that we feel that there is a need for us to basically become the champion in Malaysia first before we talk about going outside. But doesn't mean we abandon this totally. What we do right now, like for example, last year I've done a lot of tour in Tehran, basically in Bali, Indonesia, and not to talk about VVIP because we want to show this. We want to show to the world, the things that we have done in Malaysia, basically, particularly on the VVI. And one of the things that we started last year is coming out to develop this Marketing Sharia scorecard, which is dubbed to be the first in the world, basically. The whole idea coming from, the discussion that we claim that as an institution, we are aligned with the Sharia principle. But how do we assess that? It cannot be just a mere word, mere rhetoric that we are basically Sharia-based company and we are aligned. So how to measure that, because coming from the risk management fraternity, if you cannot measure, you cannot manage. Believe in that mantra. So basically, this is all habit bringing here. So I want to be able to measure that. So we work with NCF Extra to how to quantify, that whether this Islamic financial institution, of course, we start with the Takaful company, how aligned it is with bank, with basically the principle of Sharia. Next level is that how aligned it is to Bank Negara, they call it the fundamental Islamic finance. Bank Negara has outlined the 5 elements of Islamic finance with another 2 core, 7. And if you are aligned to this, then therefore you can you can say that yourself is Islamic finance. So this MSS or Mutasid Sharia is currently, I think, 70% cooked, and we hope to be able to pilot it very soon. And inshallah, this year during the Global Islamic Finance Forum, we will launch it, the first quantitative measure method to really measure where you are with regards to this. This is not for this is more something like a rating agency, to show your financial strength, but here is to show your alignment with regard to policy, Islamic to Sharia. So that will be my input.
Thank you, Encik Razwan. So this is the time that maybe I need some response from the floor. Maybe I can pick up one thing about the constraint or the challenges that Encik Razwan mentioned about when we want to innovate new products in the market. One thing that maybe we can pick up, one product mentioned about climate risk just now. So far we see very limited, to my knowledge, perhaps there's none, micro Takaful that cover the climate risk in the market. So maybe I can invite, maybe Dato' Said Muhid can give some of the perspective from the industry as well. Yeah, what are the constraints that we see more innovation?
Bismillahirrahmanirrahim. Assalamualaikum everyone, and thank you for picking me up. I feel victimized. Anyway, I will start with general comment, taking off from where Tan Sri mentioned. And Tan Sri, you talked about consolidation, you talk about internationalization and collaboration, which is one of the limbs of the financial sector blueprint 2226, and you also spoke about Takaful. I think all these three somehow or other are connected, and as you were talking just now, a lot of thoughts was buzzing in my mind, and I tried to catch it, but somehow the thoughts move faster than my ability to catch it. But anyway, I will try. Now, but I totally agree that that consolidation will help improve the performance, the growth of the current players. But we're not actually seeing any effort to consolidation happening. In fact, the contrary. With the digital insurance and Takaful operators framework, we're going to have, based on the exposure draft, 5 more. But at yesterday's industry meeting, there was a call to open up to more than 5 even. So, today we're talking about consolidation, but in reality, that's not going to happen. That's not going to happen. But there is a good thing that's going to happen with the DITO framework coming in, because that will spur innovation and inclusiveness. And afterwards, I will touch a bit on this. Dr. Nazrul, looks like I'm going to talk longer than the speakers. Okay. So on Takaful, there's now Tan Sri mentioned that there is a dearth of Takaful operators, and that in a way is curtailing the growth of Takaful. Absolutely right, but there are reasons for that. And if you're looking at statistics, a few Takaful operators have actually stopped operations in Malaysia. They started here and then they closed down because there was not enough business for them to sustain. And why is not enough business for them is because they are not being fed the business. why they are not being fed their business by Takaful operators is because of the type of portfolio that the operators go after, and the risk averseness of the operators themselves, right? For example, most Takaful operators go after retail business. They shy away from specialized business, which are large and specialized risk. So why do they do that? Possibly is because of lack of expertise in those areas, right? And possibly because of the inability to get enough spread, right? To bring in large and specialized risk that might impact upon the profitability of the risk fund, which then in turn will impact upon the ability to pay surplus because of the lower thing. So it is a catch-22 situation, and this is where the call for going beyond profitability, VBI, comes in. But then again, the question is whether or not that is being imbued, that is being driven by the shareholders down, right? If it's just at the lower level, if it's not coming, and if the shareholders themselves, if the board themselves do not buy into that, then it is just a talk lah. So to me, on the Takaful thing, two things must happen. Firstly, Dr. Musliza, talent development, skills development, right? And it is a development in not just in the usual class of business, but also in the specialized class of business. To be able to enhance the talent development, right, we need to work with Takaful or reinsurers, right? Have these reinsurers, sorry, I'm being a bit micro here, have the reinsurers to come in, adopt a particular class, have a program running for 3 years, and structure it through that 3 years. Bring these people overseas as well, expose them to more of such risk, because you don't find enough of such risk. Now, on the internalization and collaboration bit, certainly when the new digital Takaful operators come in, right, they're going to bring in the technology that they will bring in will certainly change the market, right? There's going to be user-based insurance, there's going to be on-demand insurance, there's going to be parametrics insurance models, more white labeling, aggregation plus. There's going to be Takaful administration as a service, and so on. And what this means is that, right, there will be greater reach. There will be when we talk about embedded Takaful, it's not just going to be direct to the consumers, but it's going to be embedded Takaful through distributors as well, right? But that can only come if there's also regulatory changes as well. Now, so all this in turn, I'm now coming back to the topic of innovation and inclusion. All these things then will enable microinsurance and social Takaful to happen, right? Social Takaful to happen. But for social Takaful to happen, and this is where another one of Tan Sri's point just now, there's a need to collaborate, right? It's okay if there's no consolidation. It's okay if there are more players in the market, but there must be collaboration within the industry, and this is where MTA can take the lead, right? Through,
as long as benefit the
actual intention, through a pooling arrangement, right? Through a pooling arrangement, okay, social Takaful requires sponsorships, right? Requires sponsorship. It's taking the work of the government and putting it to the private sector, right? So, but the private sector itself, because of the profit motivation within the business entities, right, will not be able to price it to a level that you could actually reach to more people, and this is where sponsorship comes in. So the question of setting up a trust fund, a trust outside of each companies. If each company were to do social financing, it will not work. It has to be done. It has to be done on the collaborative basis. It can be done through a trust basis, and it can only be done with the support of Takaful, with by implementing pooling arrangement, right? And with some tweaking of the laws to encourage sponsors to come into the trust.
Okay, thank you, Dato'.
Mr. Moderator, can I have an opportunity to just quickly respond to
just
some
a quick one.
quick one, very quick one.
Yep.
Okay. With regards to Dito, totally agree on that. With regards to micro Takaful, we are currently working with the Bank Negara on the concept of blended Takaful. You know, we go from the private and public partnership to private, public, and philanthropist partnership. And because we have this ecosystem that really supportive, which is the ecosystem of Zakat, Wakaf, Infak, and everything, we feel that we have more chance in basically having a very sustainable micro Takaful program very soon, because this is something that we're currently working. We have done the workshop together with Bank Negara on this, and with the president, with UNDP also, and what really got the UNDP basically interest then, which results them to come to our office to discuss further, is that this concept is something that they also currently working, that having seeing the potential. And with regards to the development, the talent development that I mentioned, that is something, as I mentioned, we are very family company dominant industry. So the General Takaful before, what we did last year is that we come up with the General Takaful strategy. And one of the areas that we're looking into the General Takaful strategy is the talent development. We find that the reason why, the company are shying away with the club, because there is a lack of knowledge. And quite recently, of course, we identified few areas, few clusters, few portfolio that we want to build. But we have started quite recently with one global reinsurance advisor, basically, to basically train our underwriter from all the four operator on cyber insurance. That is the low-hanging fruit that we want to look. And obviously, there are a lot of other areas that we're going to have. And this training program is a continuous training program. Hopefully, by giving them the good understanding, they start to open up, their portfolio into other niche clusters. Like Dato' mentioned, we are pretty much retail now. We want to look into all the corporate and also the large and specialized risk coming. Thank you very much.
All right, thank you, Cik Azwan and Dato'. Saya Mohib. Senang kerja saya sebagai moderator hari ini. Maybe it's an interesting discussions because Dato' mentioned about pick up the current situation. You mentioned about there's a lack of market demand out there, but hence there's a narration that we have to go outside the market. But we also facing the narrative that we still have huge segment of underserved people that still need to be catered on. And then there's always a discussion about do we need instruments, new instruments? Because the way that we see innovations, I'm always trying to pulling back to the topic of the discussions. When we say innovation, we always think about there's an end solutions, but we never think it's as a journey or an entire process. So hence we always think that we can solve, for example, the poverty or inequality in the society by moving from tawarruk to risk-sharing, perhaps, right? So we always believe that one instrument can do things, but Tan Sri also mentioned about the need of changing the mindset. Definitely, something that we would like to see forward. But because of the interest of time, I would like to see more participation from the audience. But Zo, can you show the slide again? Do we have someone from Bank Negara? Anyone from? Oh, okay, all right. So because I saw the name, maybe you would like to chip in a bit in terms of into the discussion about the concentration of domestic market. All right. Before I would like to touch also in terms of the talent development. I think Cik Rusri can also come in. But before that, maybe we can hear from Bank Negara Malaysia. Yeah.
Hello, hi. Hi everyone. My name is Liana. I'm from Bank Negara Malaysia. So, um, I would like to touch on actually VBI. My interest is more on VBI lah. So, Bank Negara introduced VBI as I mentioned in 2017. So basically, the aim is so that the industry have a coordinated efforts and a similar understanding how to move forward. And so basically, I just wanted to ask two questions instead of me giving feedback. I have two questions to the speakers today. My first question is just now Tan Sri shared about the introduction of VBI. Tan Sri mentioned about rebranding Islamic finance. Hence, we have introduced VBI in 2017. So in Tan Sri's view, have we managed to achieve the vision that we had back then? And if not, what are other things that could be done at Bank Negara and to achieve the intended outcomes? That's my first question. My second question is about VBI in light of global efforts such as ESG and sustainability. So when we first introduced VBI, there was global efforts, but at that time the interest ataupun highlights was very low. But then now VBI and global efforts are seen in parallel. So my feedback, I would like to see Tan Sri's view on how VBI can maintain its relevance. Yeah, so these are my two feedback that I would like to hear from the speakers today. Thank you.
Yeah, when I introduced it in 2017, I never thought in 2024 I'll be asked this question. But the idea was the value-based intimidation is actually consistent with the Islamic and the Sharia principle, because it has to do with ethical financing. You finance those areas where you don't degrade the environment. You help the poor to improve their livelihood. I think Raja Amir gave a good exposition just now on how value-based intimidation can be actually enhanced. Unfortunately, we have not really quantified what value-based intimidation is, because if we can quantify it, and we did not quantify it when we came up with the concept paper in 2017. If we are able to quantify it now and able to measure it, I think the concept of value-based intimidation will become more apparent, because we are able to show people these are the areas that we are looking at, and these are the improvement, and the improvement is caused by the emphasis on value-based intimidation. I think we were short on that particular aspect, so we can't actually measure what HSBC is doing, what Bank Islam is doing. We cannot actually aggregate it and show to all and sundry that actually is working. I know it's working, but we just have not quantified it, and we have not defined in greater detail what it is all about. Yeah.
Can you move to the next slide, the last? No. This is basically the survey that we conducted for this the response that we get. It's about measuring the impact. Rajami, we can help a bit in terms of sharing your experience on this. Yeah.
Yeah, so just on the number, I think, so the industry last year, 2023, we produced a VBI status update report. And in that report, we talked about each of the bank's developments per se within the value-based intimidation effort for the year. And we also put a number to what was the amount of facilitation under value-based intimidation, which I believe is in the context of 300 plus million, if I'm not wrong, but I'll just recheck the number in a minute. So that's where we are in terms of, because I believe that the scorecard was the first report that came out, and then subsequently we've come up with annual reports. And now we're actually working on an industry initiative in terms of standardizing the reporting framework for all banks. And that's something that HSBC Amanah is leading under the Financial Sector Blueprint Task Force on behalf of IBIM to come up with a standardized version of what that report looks like. How do we report to ensure that it's consistent and be able to be read and understood by all? So look out for that. That should come up in 2024. But the topic on value-based intimidation, and in my own experience, having spoken to some, so value-based intimidation is actually a global framework. So there's a global alliance for value-based banking, and this is something that was born out of Netherlands, if I'm not mistaken, GBAV. And I understood during the discourse that there's actually certain institutions who actually are purely value-based intermediaries, right? They don't they intermediate based on they're not profit maximizing organizations, and some of them are not even based in this part of the world. So we can see live case examples of how some institutions have, they're basically a value-based intermediary, full throttle, and they've proven that they actually can make profits and sustain their revenue moving forward. So they've actually taken the leaf out of Islamic banking. And a lot of the comments I hear at forums and all these kind of things is that Islamic banking or Islamic finance started out, we owned ESG before ESG even became a buzzword, but then subsequently we have fallen behind. And that's why the Securities Commission has launched Maqasid al-Sharia guidelines, which we've heard from Brother Rizwan just now. And the real idea here is to show, what is the outcome of what we're funding. So if we say it's a green bond, if we say it's a sustainability linked instrument, how many people are benefiting? Let's quantify the benefit of this financing and be able to put, like, for example, if you say in the past, we've worked on IPP bonds, right? To finance Jimah, Malakoff, and dan sebagainya, which is basically, it was Islamic finance to begin with. So to say Islamic financing in ESG is the same, not necessarily because we were financing gas-fired, coal-fired power plants in the past. But now we need to look at beyond just halal, right? If something is permissible, okay, halal, done deal. For example, if you look at a hydropower project, we need to look at what's happening downstream as well. I mean, are we, flooding irrigation? Are we flooding habitats of indigenous communities? Are we actually changing the run of river so that now fishing communities, can't do their own lifestyle? So we need to look at beyond just it's permissible, but what is the actual impact? So when we talk about, for example, what is the impact on the community, impact on the family? So I think that's what Maqasid tries to capture. And also there's a global movement called the Tayyib movement, which is again looking at, so Maqasid is principle based, but we are looking at also Tayyib, which is what is the real downstream effect of what we're financing.
Razami, just a quick one, because I get your point is that we cannot settle for just a compliance, means that we need to do more beyond that, right? And then you mentioned about maybe knowing the actual impact to the society. I think one of the response that we get as well in terms of how we can actually adopt the consultative approach. I mean, go down there and then meeting the people, asking the people how this basically financing from HSBC, for example, being affected by you. Maybe you can share as well. I'm jumping around. I'm trying to fit everything. Yeah. So how do you see the importance of this? Because you mentioned just now about ESG appear. I mean, Islamic finance appear before the term ESG. But I'm asking a question whether is this an issue of branding, or is it an issue lack of branding, or is it issue of lack of efforts to live up with the expectations of by using the terms that Tan Sri mentioned about the maybe we need to use another name for Islamic finance. So I mean your response to that before we go to the topic of talent development.
About the rebranding, if I understood Tan Sri properly, I mean he's coming more from a bias perspective. Do we say Islamic banking, then that will shy people away. And I mean, I have a real life case study where we facilitated a transaction for a multinational. So the transaction was a green mall, and we said we wanted it to be put on our balance sheet because this will directly contribute to our triple bottom line. So the client actually went down to negotiating exit clauses in the event there is market perception about Islamic finance. The first question they asked is how is this related to terrorism financing? Number one, and then number two, they asked what is the get out clause if all of a sudden I am now implicated in taking this kind of financing. So, we had to actually include certain, we gave the comfort to the client that if there is some publicity issue, we will refinance it back to conventional. There will be break funding costs, of course, but, we will give you that comfort. They needed that comfort. So number one is also, just on the, just to expand a bit, just now we were talking a lot about cross-border globalization. We have low-hanging fruit in the country in the multinationals. Right? So we find, we feel that is an important client segment which we need to do da'wah to in terms of getting them comfortable. So we've done one for Icano, it's public news. We've also facilitated for a Japanese hypermart multinational recently. So that's in the low-hanging fruit in the country beyond we move offshore. But back to the point on, what is the impact of the financing? So that is indeed something that everybody wants to know, because this is even ESG is moving to 2.0. So before it was just utilization of proceeds. What are you utilizing the funds for? Can you prove to me that you've allocated the funds accordingly? And a lot of the case, it's a tagging game. Money is fungible. So I don't need to say I raised $200 today, I deployed it for 200. It's, I can say I looked through my expenditure for the last 2 years. You have a 2-year look back period, and you can say, okay, this one it meets the criteria, so I can tag it to that, because money is fungible. So now there's so many frameworks which are coming out, and that's why we're working with the World Bank, who has come up also on a similar sort of guidelines to talk about what is the impact to the financing that was provided. Just don't say I provided it to a disadvantaged community, or I provided it for solar power financing project. What was the actual GHG reduction that was a result of that particular financing? So we're moving more to that. That I would expect to see that moving forward in the next couple of years, more detail on the impact of that particular financing to avoid the notion of greenwashing. There's a lot of areas about greenwashing, impact washing, Sharia washing that we are seeing now.
Yeah. All right, thank you, Raja Amir. Maybe I would like to touch on the issue raised by Dato' Syed Mohib about on the talent development. I think this is another important things that we have to look forward in the future. In terms of how are we, good in terms of giving the opportunity to the talents, perhaps, to be innovative enough. Because one thing about innovation is that you need to provide a freedom or space to this talent to at least, it's okay to be fail at one point of time. Because once you kill that freedom, that's where you kill the creativity, right? So that's the remarks by the late Sir Ken Robinson about educations. So yeah, Cik Yusri just come back at the right point of time. So the issue of talent development, Cik Yusri, because just now you listened from Tan Sri Muhammad Ibrahim. I think I would say it's a soft critics Tan Sri, about the expectation on Sharia scholars and everything. So how, maybe Cik Yusri can give your perspective, in terms of how well we are doing in terms of encouraging innovative solution from these young talents and scholars. Oh, yeah.
Assalamualaikum warahmatullahi wabarakatuh. Bismillahirrahmanirrahim. Rabbi shrah li sadri wa yassir li amri wa hlul min lisani yafqahu qawli. I thought I was just here to listen to Tan Sri and my colleague Raja Amir and Cik Razwan, but looks like I have to pay for it. I think from the point of view of WIFIM, when the current team came about 7 years ago, when we talk about talent development, one of the things that we always ask ourselves, how do we actually help the industry grow, right, through talent? And one of the things that we realized that we must initially the idea was to actually use a phrase what we call democratizing the knowledge of Islamic finance. But when we have a discussion with Tan Sri Dr. Bakar, I say that democratizing is actually too heavy. Why don't you actually use socializing knowledge of Islamic finance? So based on that, among the things that we did, the innovation that we did was pretty simple. First, we look at the domestic market. How do we actually help the industry to grow? And one thing that we did was, the first thing we did was we look at our curriculum. And we realized that, interestingly, even though we're in Malaysia, the curriculum are all in English, right? The learning of Islamic finance, at least from IFE point of view, mostly is in English. So, especially for our certification. So what we did was, we took the effort to translate our certification to Bahasa Malaysia. And when we did that, and then we realized that the whole group of new people coming in wanting to learn Islamic finance, and some of these people comes from Koperasi, Koperasi, and there's a group that came from Yapim, right? And there was even the discussion at the ministry level at that point of time to actually include it under Islamic Institute Latihan Islam, ILIM, Islam Malaysia. So and basically why we feel that the knowledge needs to be expanded is that maybe the idea or innovation may be in another group of people which is outside the industry. So that was the first thing we did, and alhamdulillah, this idea has grown, and we can see that even in the cooperative sector, cooperative and cooperative sector, people are taking and learning Islamic finance based on the model developed at the banking sector. So the idea is basically to make sure that those within the, say for example, cooperative sector and the bank sector have almost a common level of knowledge when it comes to Islamic finance, and hopefully innovation will come, right? So that one. And the other thing is that Tan Sri did mention about cross-border transaction. And this is something that when I was in Banagada, we tried to facilitate. And even in film, we also asked this question: how do we actually help industry to learn cross-border, right? And how do we actually get the industry through cross-border? And we feel that one way is maybe to actually provide on the other side knowledge as well. And that's what we've done. And normally what we do, we will try to actually, if there's an opportunity, especially if it is being a request for proposal by a central bank, we will go in. We will go in and normally they will ask for learning in Islamic finance, but we will go in with a certification in mind, a certification program. So we did that quite successfully in Seychelles, and that with 50 central bankers in Seychelles holding IFIM certificates. And we also tried to find opportunity. One of the opportunities that we actually did was when we were in we get the opportunity to have a conversation with the Philippine Central Bank. The idea is basically when we have the conversation, we say, okay, why don't you actually take our this certification, complimentary, free, try it. And little that we know, they're also assessing this knowledge. And we end up getting 50 central bankers from Philippines taking out our certification, and also another 50 for Asian development taking the certification. Okay, why do we do this? It's basically, our view is that the moment they have that knowledge, conversation will happen. So counterparty from Philippines and Malaysia can actually communicate, and hopefully that will actually help the industry to grow. So that's the one of the things that we do through knowledge. And in terms of actually getting the Sharia scholar mindset, as Antri was saying, so one of the things that we've done in terms of actually building up the footprint in terms of knowledge is that try to work with reputable institutions. One of the institutions that we work with is Cambridge University. This one is in relation to Institute of Sustainability Leadership. So we've done 3 cohorts online. That's actually manfaat COVID. We'll be able to do it online. But when we have this program, besides targeting the C-suite or C-1 or board of directors, it's also when we also go out to the bank and say, make sure your Sharia scholars are also part of this. And for all of this cohort, we can see that Sharia scholars coming in and actually participate and having conversation with professors and market experts from selected by Cambridge University. So these are the things that we hope to be able to actually broaden their mindset and hopefully be able to facilitate some of what Tan Sri was saying in terms of the standardization of the Sharia view. The other thing is basically in terms of the other things that we also try to do through talent development is to develop the right worldview in terms of looking at the Islamic and not purely from a transactional point of view, or not merely because we are limited by the business model. And how do we actually go beyond that? So we've been going around looking at materials And we come across this material developed by ICLIF more than 10 years ago. I think it was actually spearheaded by Tan Sri Rafia Salim. And currently the material is joint published between ICLIF and IFIM. And now that right is reside with Asian School Business. So we work with Asian School Business to run a leadership program for 5 days, and we actually not discuss about Islamic finance, but discuss in terms of developing the right worldview based on Islamic leadership structures. So, and even in that kind of program, we also bring in the Sharia scholar to also contribute their views. So hopefully, once this worldview is established, we can actually see more innovation coming into the perspective. So as a capacity building institution, we don't just try to do certification. We try to see in terms of looking at how do we actually help the industry grow, how innovation can come in, and hopefully, that can actually address some of the pain points that we actually discussed today. And that's why I'm here. I'm also to hear what are still out there that we need to address from the point of view of talent. But the other thing is that we also collaborate with a lot of universities to make sure that we have steady supply of graduates that are with the right skill set to be able to go into the market and actually make a significant contribution.
Thank you, Encik Yusri. I mean, I hope that the aspiration can be translated or embedded in the existing program in the future. I believe Tan Sri have something to say, but Tan Sri, because to due interest of time, I think we can publish the Tan Sri response later on. Maybe
one thing I remember Tan Sri always remind me, Yusri, just do it. If it does not work, we start all over again.
Okay.
And the other thing I always remind me, do not be administrator, make a change.
Make a change, definitely. That's the mindset that we need to have. Do we have any other response? Last, perhaps, but if there is no other response, maybe I would like to get Dr. Musliza from IMFC, maybe try to give your perspective, because when we read the financial sector blueprint, I mean, this is I'm not saying the burden, but there's a role and responsibility that have to be taken up by IMFC Leadership Council with the narrations from the Halal to Tayyib. I mean, we listened to Tan Sri Azban Mokhtar in the last conference as well. He keep mentioning this, but maybe you can enlighten us in terms of the directions, perhaps.
Okay. Assalamualaikum warahmatullahi wabarakatuh. I thought I came here just to be an observer and to learn more of what are the issues that is pertaining in the Islamic finance and Takaful in terms of what the industry thinks that sorry, I'm a bit nervous because I didn't prepare anything. So basically what we are doing right now at the MIFC Leadership Council, basically, we are trying to learn the landscape of what Malaysia is in terms of Islamic finance. And then from there on, like, basically Tan Sri Azman, his vision is to bring Malaysia as because apparently, like, we have always been the number one in terms of Islamic finance, but then we sort of plateaued because, being the number one, sort of like monopoly, we tend to become complacent. So we are trying to think of ways. We're trying to learn from the industry point of view, from the scholars' point of view, what is it that we need to, how we can assist in terms of bringing Islamic finance further into the global landscape. So one of it is that Dr. Nazrul just now mentioned about halal to taib. So basically, halal is actually what is the minimum that we have to achieve. So how do we move towards going taib means good. So how do we move forward from being just Tan Sri Azman gave an example of a simple example. KFC is halal. Nando's is also halal. But then what makes Nando's taib is that it's healthier because it's grilled instead of being deep fried. So that is something that we are working on to, bring Islamic finance going towards being taib instead of just halal. Halal should be the bare minimum. There are things in this world that is legal, but not necessarily halal. So, but as being Muslims, we need to be minimum halal, and then we go towards taib. So, my duty here is actually to learn what is it that we can, help to bring to work together with all the industry players, the scholars, and how to bring I'm going to bring back all this feedback that I have, and we're gonna somehow incorporate it into we have 10 impact projects that we are planning to roll out. So one of them includes relation to social finance, and then there's also something to do with helping the what we call pasar malam economy, and also in terms of Takaful, like how do we help in terms of calamities, because relating to the ESG, when there is floods and everything, we don't actually have specific products that can help these small, I mean underserved and unserved people when it comes to their businesses, like their like the farmers. What happens when there are floods, and they basically how to help them. So that is partly of what we are working on right now. So yeah, that's
Yeah.
all.
There's a lot, definitely.
Yeah, it's a lot. So
We look
I'm
forward
trying
to.
summarize everything up,
Yeah,
but
yeah. I'm
I've
not.
got bits and pieces here and there. So hope
I'm
you-
not doing justice to you. Two things. First, I didn't give an early notice.
yeah.
The second one is that I don't give you enough time. But
Yeah.
perhaps you can have more engagement,
Yeah.
inshallah, in the future.
Sure.
So due to the interest of time, I think. Okay, Dr. Habib, yes. I'll do two things. Okay, all right, two. Dr. Habib.
Okay, thank you, Dr. Azizi, and of course, thank you all panelists. I think my question very simple. The first thing, I think the concentration on Sharia scholar and what is actually needed from Sharia scholars to go beyond domestic transaction rather than cross-border. I think you might need another, maybe if you can put it in your portfolio, we might need another discussion, including Sharia scholars, to hear from them. And definitely we need to maybe point out what is actually needed from them. Is it in terms of codification? We want to codify this scholarly discussion. Do we want to unify the opinion? And are we considering the jurisdiction, and each jurisdiction, it has sensitivity? For instance, when it comes to like sukuk, we have sukuk murabaha. But maybe in Saudi, in GCC, they are not interested in murabaha, or they don't think that you can actually structure sukuk on murabaha or tawarruk, for instance, or ina. And whether we actually in the state of haja, like in Malaysia, for instance, or we are not in the state of haja. For instance, in Malaysia, we have 60% of Muslim. Whereby in GCC, maybe 19% of Muslim. In Nigeria, maybe 50-50. Are we unifying the opinion of scholars? Do we want to codify the scholar? I think it's something that is very deep. And also in structuring, even though in banking sector, where do we put Sharia? Is it in unit, business unit? Whereby when you structure the product, you put Sharia at the last. How we actually harmonizing all these three lines of defense? I think it's something that we should think about it. Because even though in the governance framework, Sharia governance framework, where do we put Sharia? Is it in the middle or in the beginning or at the end? So I think that's my first question. The second question is for Yang Mulia Raja Amir. You talk about digitalization, which 100% we are totally agree with the motion. But what is needed? You mentioned, you cite the example of Maldives, that they open for even cross-border. Malaysia, not yet. We have digital bank now. Alhamdulillah, they just came in. What is actually needed? Is it from regulators? Is it from players? Or is it also from Sharia that is not allowed? And my last question is, we talk about innovation, but with your first example, okay, which kind of innovation we are actually leading to? Innovation that we don't take into consideration the future. It's not sustainable, right? And I think we had the meeting with Central Bank, SAC, with all Sharia. They give us, I think, 5 framework in Sharia research. And the last one is itibar ma'alat, the future. You need to look whether it's actually sustainable or not sustainable. When you understand the concept, you understand the maqasid, you understand all the scenario. You also need to understand the future, the consequence of that opinion. So my question, maybe if any of panelists can.
Yes.
Thank
Okay,
you.
Thank you. So I will let the panelists to respond to that during their concluding remarks. But can I give like 2 minutes, Mrs. MC? Can I get extra 5 minutes? Is it okay? 5 minutes. Okay.
Okay, Bismillahirrahmanirrahim. Mine very quick one. Thank you so much for the panels and the participants for the industry talk for today. And it is a quick one from me about the key takeaway from this session, today's session. First about internalization, the globalization that Islamic banking in Malaysia, mainly we need to go internalization, outside of Malaysia, as I have, my opinion is we are already at the saturation in Malaysia case, in domestic market. Second, on the key takeaway points that I would like to mention about the VBI, as like our Bank Negara has mentioned about the VBI, how we move ahead forward about the VBI. And one thing about that, how we quantify, as what Raja Amir has mentioned, how you quantify the benefits of the impact of financing itself. And the third key, I would say that key takeaway on our today discussion about talent management. And I can see here from our institute, yeah, I'm from the IBF, I can say that our institute has managed to get the pool of talents from internalization, yeah, across the globe. And when they graduate from our institute, they are struggling to get the job at the market level. Yeah, internalization at the international level as well as local market. And this could be certain that we can say that how the industry could help people, yeah, those who are inexperienced, but they have in terms of knowledge, yeah, graduate from our institute or other university, but how these people's, our talent can go into the market. And these are our generation. So I think the discussion won't stop here. And I believe that a lot of things that we can do as a accumulative efforts. And thank you so much again.
Okay. Thank you so much, Dr. Rina. I mean, definitely this is going to be, I mean, the starting point. Of course, we cannot cover a lot of things in one session. We have 2 segments of the banking and industry. I mean, we're not doing a good justice in terms of that. Perhaps following after this, I was talking to Tan Sri, maybe we can have a separate roundtable discussion picking up the certain issues that we discussed today. So this is just like pulling the issues for purpose. But one, we can identify main key point of this discussion is that the issue about the domestic concentration, the talent development definitely is going to be one of them. But I will, because due to the time that we have, perhaps I will go, into the concluding.
Dr. Nazrul, excuse me.
Yep.
I've seen someone raise up.
Yes, so sorry. One last question.
Okay, sure.
Hi, Assalamualaikum everyone. Today's is about innovation, and I'm actually from a Takaful background myself. Actually, this is more of a concern. I currently see that now technology, everything, insurance and Takaful is digitalized. Okay, so which allows people to demand more on purchasing protection online. And based on my observation last time, before there was accessibility in internet, everyone purchased tickets, travel tickets. I mean, they want to go for vacations, they go for travel agencies, right? Now everything is purchased online. Travel agencies, a lot of them closed down. So my concern is there actually initiatives from the Islamic finance industry that can help to protect future Takaful advisors, okay, to be relevant in the future, or should they option out to be a financial advisors instead? Thank you.
Right. You come at the right time. Then I will leave the question to Encik Razwan, and then Encik Razwan, you can
Please.
conclude.
Thank you very much.
The remarks,
Okay.
yeah.
So yes, at the beginning when this being introduced, we are a creature of of certainty. When there is uncertainty, basically everyone is afraid. But I would like to recall one study that we do. Basically, this is the market demand study where we involve this particular segment, what we call the M40, young family, gig workers, and everything. Pretty much, the youngsters between the age of 27 to 30 something, basically. While 90% of them basically are very well versed with online transaction and everything, when it comes to having insurance / accountable decision, 80% of them prefer to deal with financial advisor, not directly through the system. So basically, there is, yes, there is a concern that there will be replacement on this. Yeah, like for example, you see Grab basically, come out with a very disruptive way to basically, do things. And as a result, the taxi industry is impacted. But there is another kind of driver is actually, arising from that. It's not like the Grab themselves actually, online taking people over there. There is a driver. So people is always the main element of Takaful and insurance. So we pretty much sure that the DITO or the digital Takaful operator that coming, they are looking into a very niche market that currently there is none of the Takaful operator is actually focusing at, because of two things. One is that there is a niche market, as the name would suggest, that this is the area where they can grow. And if let's say they come head on to the Takaful operator, also they will not be beneficial to them, owing to the size and everything, because the Takaful operator have a long basically standing in there. So I foresee that the impact will not be on the financial advisor. The financial advisor will evolve. For example, we at the MTA also we believe that there should be a competency and development pathway for the agent, for the financial advisor, so that they can move one level to another to give a more basically better or more professional advice. But at the same time, they should use technology. One of the main biggest disruptor that is happening in our lifetime is COVID-19. In COVID-19, I think thanks to our young industry status, we fare much better compared to other industry. As a matter of fact, a majority, from the company where I'm from, I worked with the operator then, we only 2 weeks to normalize. When there is a lockdown, we only take 2 weeks, whereas there are also companies that they after 3 months also cannot normalize. Why we can do that fast? Because being a Takaful operator, we are new and therefore we are more exposed to technology, and therefore we can use the technology basically for our benefit. The Takaful industry grows quite phenomenally, like 30%, in excess of 30% during the COVID area. And the trajectory now still maintained. We feel that technology is a very important part and it should not be feared while Ditto is coming, it would not replace what we have. It is complementing what we have right now. Because mind you, we have another 40% of market share that we're going to basically grab. And this is the kind of market share potentially the agency are not interested in because it has to be voluminous. So this is where the Ditto can play a very important role in order to provide the accessibility to the kampung folk or the underserved. That's my view.
Thank you, Encik Azwan. Maybe I can go next to Raja Amir for your key takeaways.
Okay, I'll just take just to respond to the brother's question, and then but before that, I just, if I can just wrap up to say that I think this is a very interesting session lah. I've been in quite a few sessions myself, and I think that this bringing together captains of industry and the academia is very important and should be done more of, because we have it's a collective effort and we have a long more way to go. So I think that these kind of just would like to put out there that this session was beneficial. So I think I think we've talked about a number of issues today. Cross-border was one. I mean, given we're an international Islamic bank, we were voted the world's best, right? And we want to defend Kuala Lumpur as that hub moving forward. I think it's very important that these discussions go on more about the ability to facilitate transactions from Malaysia, and also keeping that position strong. Because as I mentioned today, we are number 3 actually in terms of our assets as a part of the industry. So we've lost that position. And while Toyib and Makassar is important, we still need to talk about what is hampering us from facilitating those transactions. I mean, in the past, we had tax benefits, which drew a lot of those assets, but a lot of the Islamic banks were not ready at that point in time. We've come a long way. We are now ready. So if some of those tax benefits which were given in the early days were introduced now, I think we could do a bit more with it. So having said that, just on that point of the digital, right? So again, when we talk about digital, and I think a key announcement was made last year when Maybank decided to position Singapore as their global wealth management hub. Immediately questions were asked, because I have been promoting Malaysia as a global hub to my global group, and our local bank has now positioned Singapore as the wealth management hub. No criticism on them whatsoever, but these then raises questions: why are you pushing so aggressively when your fellow local champions is positioning Singapore as the wealth management hub? So just on that course, I think there's a bit more democracy and ease of doing business in Singapore in terms of opening up. You don't need to be there as a resident. The issues are two-pronged, just to answer your question directly. One is with the bank's own credit process. They say that they need to see somebody if they want to open up their account. You can't be doing it from outside of Malaysia, so that's banks. But that could be an interpretation of what Bank Negara says about your ability to open up account for non-residents. So it's not hard cast in stone, but that's their interpretation. So potentially, if we want to become this democratically open banking system where free flow of information, the ability to open accounts, then maybe there needs to be a steer from the regulator to say that, look, we're now becoming a bit more flexible on this, but subject to each and every bank's internal, credit onboarding process. And that moves back to the wealth management point. Now, just to close off on the Sharia point, can you give me 2 minutes to allow my head of Sharia to comment on that, because he is in the front line dealing with the risk governance framework, as well as dealing with this global interpretation of what works in Malaysia and what doesn't. Firas, if I can ask you to comment.
Thank you very much. Assalamu alaikum, everyone. I think I'll be brief, and I'll be happy to pick it up during after the session is concluded. But essentially, we have different schools of thought, even in Malaysia, right? So, for example, the repo market, the replacement for repo market in Malaysia, there's a debate whether should it be based on sale and buyback or based on collateralized commodity murabaha. And you have two camps of banks, Islamic banks, one camp advocating for this and one camp advocating for that, right? So I think the focus needs to be on what kind of problems are we trying to solve? Why is repo market important for Islamic banks? And why is it important to have standardization? So we are trying to achieve standardization within Malaysia and then also with other countries. So you would be familiar that there's a whole debate in Indonesia regarding tawarruk, for example, and the Sharia governance process in Indonesia. It's better, more streamlined now, but I understand that in the past you would have to consult with, Jamiatul Ulama, which is 300 scholars, right, in order to arrive at a decision. And then you go to the Middle East and you see that there is no centralized Sharia governance process. It's more about each bank and their own interpretation. So what's required is, first of all, a willingness to engage in this process from different regions in order to arrive at a particular outcome, which is this idea of internationalization, right? As long as that objective is there, then I think scholars will work towards that. But right now, the objective is compliance. As you would know, Sharia is a compliance function, and there's always that healthy tension between compliance and innovation, right? And I think that's the tension that we are highlighting, and the fact that we are now reaching a plateau. We need more flexibility and more ijtihad, I would say, in order to expand the product offering. Thank you.
Yeah, and just to wrap up on the sustainability point, I mean, I think your example just now was very thought-provoking in the sense that, it was a novel idea, but then it was not sustainable. So I think that's what we need to underscore. When we launch a product, we need to make sure that there's commercially viable. There's going to be take-up, not just because it's a good thing. So I'll give you an example is Bank Negara's Low Carbon Transition Fund, LCTF, which is essentially a subsidy given to SMEs in order for them to transition. And I heard at the last JC3 meeting that the take-up is extremely low, even though it's been offered multiple times to SMEs. So again, you launch this product, you do this thing, but nobody takes up. So for us, I think when it comes to innovation, it's talking about what we can do with the existing products on the shelf, open up the market to more flexibility. So if I just give you the capital markets example to end off with, Government of Malaysia in 2002, it was a pure ijarah structure where we used schools to start off with. 2010, we innovated further to include a non-tangible asset, which was shares. So it became asset light. And then by 2015, 2016, we started to use revenue streams associated with JPJ. So the rights to use road transportation rights. And then we even went on to use Prasarana's capacity on their trains as it was the Manafai Suku using capacity, which has been done with telecommunications companies who have used vouchers for air minutes and also internet. So the reason why we do all this, or rather why the government pushes us to do this, is to have more flexibility in the underlying assets so more people can access the market, showing examples to other issuers that, hey, it's not so difficult. It's not just about using physical assets, which would be encumbered during the life. Now you can use different forms of assets. So it's innovating within there. And, just to conclude, so there's a lot of innovation in products, taking asset-backed financing instead of a direct credit lending, receivables-based financing, risk sharing. So we are consistently pushing the boundaries, use of proceeds, sustainability-linked sukuk. There's only been one in the market so far, which we assisted for Yinsen. Everybody is quite scared to do it because it's punitive if you don't meet so that kind of innovation, I believe, is a bit more sustainable because it opens up the market. And ultimately, if you come up with products which, for example, savings linked to Hajj, instead of putting it in Tabung Haji, you put it in a current account with the savings to Hajj, or we give you a zakat. Another example was Maybank launched a transition credit card where you are able to get points on if you shop at certain sustainable shops, and they tell you your carbon footprint for the week. So if you've isi minyak, for example, at a pump station, they'll tell you your GHG emissions from this week is such and such. And you can offset it by taking the train 7 times, for example. So this kind of product, I've asked them, is it commercially viable? Has it been successful? So we'll see. So these are innovative within the space of existing products.
Can it be better in the cost of financing for that? I mean, if let's say I emit more carbon,
Yeah.
then I'll be,
It could do, but will somebody want to buy this credit card after that? Remains the question now. Yeah.
Right. Okay. Yeah, definitely. Okay, thank you so much, Raja Amin. I mean, we leave the best for the last, Sri. Our captain, ex-captain.
First, the future of Islamic finance, I think if we want to grow, we have to go internalization. That's the only way for us to expand. We cannot rely on domestic market anymore. Second, the nature of Islamic finance education have changed. These changes was brought about by banking and Takaful products becoming more sophisticated. And then the nature of risk associated with it also have changed. And in fact, you have metaphors into a different creature altogether. And the needs of consumers and corporates have also evolved. It's not like before. And then technology forces those changes. In fact, now with the advent of AI and the advancement in information technology, whether the practices that we are doing now is still relevant or whether we need to change it because of the technology that have brought even more convenience and expediency. So the syllabus of Islamic finance need to know more what they are doing now. They need to know about conventional banking services, IT matters, financial management, accounting standards and practices, legal and tax matters. It cannot be only on matters relating to Sharia anymore. It doesn't work that way anymore. The world have changed. Islamic finance, education need to change drastically. Thanks.
Thank you so much, Tun Sri. I think that's the narrations moving forwards. I mean, we and I mean me and my colleagues at IBF ourselves, we want to see that transition moving forwards. When it comes to supervising the thesis, we don't want to see, you know, the discussion just concentration on what the permissibility of Sharia and everything, but we want to see, I mean, a better discussion, more impactful discussion, because we want to create in the future is that Islamic finance that is driven by purpose, by an impact that perhaps we can contribute to the well-being of the society in the future. I'm actually running out of idea to conclude the session because it's too many. Things. So I think I committed two sins as a moderator. First, I didn't read up the profile of the speaker. The second one is that I'm not planning to give any concluding remarks because I think it's quite rich discussion already. So with that, thank you so much. I mean, our panelists, Raja Amir, Tan Sri Muhammad Ibrahim, and also Encik Razwan. Encik Razwan, we hope that you recover fast. Yeah, look forward to see you in person, inshallah. So, and thank you for being a good second moderator for today, everyone. So definitely, it was a fruitful discussion. So I'll pass back to Madam MC. Thank you so much.
Alhamdulillah, such a rich tapestry of insights we have woven together here. Thank you so much to the moderator and the panelists for the enlightening discourse. As a show of gratitude and appreciation to the panelists and moderator, I would like to invite Dr. Habibullah Zakaria to present the souvenirs to our respected panelists and moderator. I would like to invite Tan Sri Muhammad Ibrahim. Thank you. Thank you, Tan Sri. And then next, our guest, Yang Mulia Raja Amir Shah Raja Azwa. Next, Puan Shazlina to receive the gift on behalf of Encik Muhammad Razwan. And last but not least, our moderator, Dr. Nazrul Hazizi Nordin. Thank you, everyone. Thank you, Dr. Habibullah. Okay. Before we close, I would like to invite all participants to come down and move closer to the front so we can proceed to take a group photo together. Yes. Yeah. Okay. A request from the committee. We would like to call upon the guests, our VIP first. Yeah. Group photo for the VIPs first.
It's not what you do. Yeah.
Please, one for one. Just take 5 minutes.
To all the participants, I hope you guys can wait a bit for the group photo session. We don't want to lose our crowd for the group photo.
Termasuk tangan ni.
Macam ni. Foto bawah. Mas sebelah. Tak. Aduh, tolong.
All right. Now, everyone, please come forward, joining us for the group photo.
Hidup lah Habis lah.
So, macam mana nak arrange?
Macam itulah belakang lah macam mana pun. Boleh.
All right. Okay, some of you can go up to the stage.
Ini atas ni.
Our photographer, do you have any consent on the arrangement part? Good. Okay. Are we good right now? Boleh. Naik je kat atas. Go. All right, ready? Okay, thank you, everyone. Okay. As our event comes to a close, we thank you for your participation. May the knowledge and exchange today inspire us to further the cause of Islamic finance with commitment and innovations. We end today's event with the hope that Allah subhanahu wa ta'ala accepts our efforts and grant us the ability to apply the wisdom gained in our professional and personal lives. On behalf of the organizing committees, I would like to apologize if we have done any mistakes throughout the event. Follow us on social media for updates on future events. I end my duty as Master of Ceremony for today's event with Wabillahi Taufiq wal Hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Terima kasih, Encik Razak.
All VIPs are invited